Tonight, we're going to talk to you all about Credit Karma versus FICO. Okay. Credit Karma versus the FICO score. As many of you all know, Credit Karma has most definitely been one of the, I would say, the most popular free tools out there. But a lot of people don't know exactly how it works with the FICO score or how to get their scores. We're going to go into that this evening. Okay. So, welcome to the Credit Blueprint. Let's get right into it. Make sure you guys go and download that free credit ebook today as well. All right. So, by the way, if you want to looking to increase your credit score, qualify for home ownership, or lower your monthly car payment, we can help you. Go ahead and scan that QR code and we'll help you accomplish your goals like we help those people right there. All right. So, now let's first off kick it off with Credit Karma. Okay. Credit Karma uses an algorithm, okay? And that algorithm is Vantage Score, okay? Now, Vantage Score is a score that was made by the three credit bureaus, the major three credit bureaus, Equifax, Experian, and TransUnion, okay? They came out with the Vantage 3.0, and now the Vantage 4.0 is out. Less than 10 to 15% of financial institutions use the Vantage score to make a decision. Okay. A lot of people don't know that. Now, here's one thing that a lot of people do not know. Vantage score is the algorithm that Credit Karma shows. Okay. But Credit Karma is probably the most popular because they were one of the first ones to roll out the Vantage score. Now, you can actually get Vantage score directly from all these sources, but Credit Karma is, I would say, the most popular. Then, of course, you have Wallet Hub. So to score that Wallet Hub, when you go to wallethub.com, they give you a Vantage score. Credit Sesame gives you a Vantage score. The Capital One, the score that Capital One shows you, I forgot what it was called. That's what I was thinking about. But that score that Capital One shows you, that is a Vantage score. When you go to transunion.com, okay. So, matter of fact, I'm gonna show you guys this. I don't think a lot of people have seen this before, but when you go to transunion.com, I'm gonna actually pull it up real quick. I'm sorry, transunion.com as well as equifax.com. Okay. And a lot of people don't know that that's the score that they end up talking about. So I'm going to share this tab so you guys can actually see what this looks like. Okay. So when you go to equifax.com and they say, hey, your credit, your identity, you can monitor whatever, right? And then you click on sign up. Okay. Now, once you go click on sign up, you know what? Actually, let me go back. Let me go back. When you click on learn more, okay, so you guys can click on learn more, you'll see right when you scroll down just a little bit right there, it says right here, the score provided is Vantage Score 3.0 based on Equifax data. Okay. So the credit bureaus have been using Vantage Score 3.0, okay? Because again, they don't have to pay for it, okay? They created it, so it keeps costs down. I want to make sure you guys saw that, so you guys can actually see, that again, it is on their website. All right, Identity IQ, Smart Credit, and all 90% of free score websites use Vantage Score. Now, here's the thing: a lot of people like to say that Vantage Score or Credit Karma is not accurate. Okay. Anyone that says that does not understand credit or they simply don't know. Okay. So Vantage Score is 100% accurate. I'm going to say that one more time. Vantage Score is 100% accurate. Okay. Here's what people are missing: Vantage Score is the Burger King of the industry. Okay. No matter what you think about Burger King, they will, I won't say always, but let's just say that they're probably a strong number two next to, you know who, McDonald's, right? FICO is the McDonald's of the industry. Now, they both sell food, they both are restaurants. And just like these are both credit scores. However, the most popular of the restaurants is McDonald's. Same things, with the scores. The most popular is FICO. Okay. Now, here's the thing: that doesn't mean that one is accurate and one is not accurate. They both sell the same stuff. The difference is that FICO has a different algorithm and the banks use their algorithm. So it's very common for a person to see a Credit Karma score or essentially a Vantage score on any of these platforms, but typically, for this purpose, Credit Karma, right? And then they say, hey, I went to the dealership and the score that they showed me wasn't my Credit Karma score. I went to apply for a mortgage, right? and the score that they showed me was not my Credit Karma score. I got denied for a credit card. They sent me a letter in the mail, and the score that they showed me was not my Credit Karma score. So, what are you talking about, Calvin? Well, here's what I'm talking about. All of those platforms, 90% of them use, 85 to 90% of them use FICO. So, why would a person use Vantage Score? Here's why. Number one, it's free. That's, let's be honest. But number two, mainly because you have an idea of where your scores are. For example, if your scores are in the 700s on Vantage Score, Credit Karma, for example, if it's 700 on Credit Karma, chances are you are close, keyword close, to 700 with FICO. Now, if you don't like to see that score, that's fine. And I'll show you all how to see your FICO scores because you have more than just three. Okay. But that is what Vantage Score is used by. All right. By the way, guys, go ahead. This is just a reminder to like the video, share, and make sure you guys go ahead and subscribe as well. By the way, if you guys are looking to accomplish your goal of homeownership this year, we most definitely can help you. Like we've helped all these people right here go into homeownership. We're talking about it right now in our community. So go ahead and scan that QR code to learn more about our online community. We're answering credit questions every single day. We're in there. We have live weekly calls. And for the month of June, we're going into homeownership. So scan the QR code to find out more. Now, FICO score. Now, FICO, of course, has been out for a very long time. They're used by 85 to 90% of lenders, guys. 85 to 90% of lenders. Now, they've been creating credit scores since the 1980s. Okay. They've been making credit scores since the 1980s. All right. So now, why do people use FICO so much? Well, it's very simple. One, they were the first ones to say, hey, we need to start putting some type of score around people. Okay. That way, when we put this score around them, we essentially say, hey, this person, this is why you have to pay this interest rate. This is why you have to do XYZ. And if they put that behind and say, hey, this is the reason why, then that's what's going to end up happening. Okay. And so they came out with the FICO score. By the way, that's Fair Isaac Incorporation. Also, too, if you guys want me to make a documentary on this, I know don't worry. I know I asked this before on another video, and we're putting this together. But let us know if you guys are interested. If you want us to put a documentary together, let us know inside the comments below. And we'll begin to the comments here shortly as well. All right. So now there's two ways to see your FICO scores. There's a few ways, but to be honest with you, it's really just two main ways. Okay. Now with with FICO, you either have to pay for the score. Okay. You either have to pay for the score, or you're going to be getting it from someone once they actually run your credits. Okay. So for example, if you go to myfico.com, so that's the site you want to go to, myfico.com. So that's myfico.com. Now, when you go to myfico.com, this is going to give you access to all of your credit scores. And I'm going to show you guys how many scores you have. A lot of people don't know how many scores you actually have. I'm going to show you guys all of your scores. Okay. And then obviously the other way is someone actually running your credit. And if they run your credit, that is called a hard pull. Now, anytime you look at your own credit, that is a soft pull. Okay. That is a soft pull. Okay. So which means it does not affect your credit, because people always ask that question. Okay. So it will not affect your credit. That said, there's 30 plus credit scores, and that number is growing. And I'm going to show you all why they have so many scores and what those scores mean, because they come out with new models every 5 to 7 years. Technically, it's every 5 years, but a lot of times financial institutions don't start implementing them until a couple years later, or they don't get approved into the mainstream until a couple years later. Okay. So now let's go ahead and see what that looks like. Okay. This is what this looks like here. This is what actually makes the scores. Okay. So for example, on the left-hand side, we have the FICO score. And of course, you see right here, it says people that are considered a poor FICO score is between 300 and 579. That's a big gap. Okay. So they're saying that anything that's 579 or less is considered a poor credit score. Now let's swing on over to Vantage Score. What do they consider a poor credit score? Well, they don't have a poor. They have a very poor. They have 300 to 499. But that meaning that status is huge because usually if you're very poor, this means if your score is very poor, then this means, of course, you may not get approved or you'll get the worst interest rates possible. Then the next bracket for them is 500 to 600, and they consider that poor. All right. Now, the next tier, technically going into FICO, will be 580 to 669. Yet again, another big amount of points. Okay. So you can see here that Vantage Score is a little bit more lenient on the scores. They say, listen, man, your past is not your future. Those late payments is not who you're going to be in the future. So they're a little bit more lenient. Now, I know for years, a lot of people have been cracking jokes and stuff like that about Credit Karma. Yeah, I get it. Trust me, I get it. And really what it is really the frustration of seeing your free scores and then not understand why all these scores exist in the first place. And I'm going to show you guys those scores in a second. But it's almost like it's made to confuse you on purpose. Because remember, guys, the less you know, the more money they're going to make. Again, the less you know, the more the banks are going to make. Okay. Then we go into, of course, the other score brackets as well too. And short version is Vantage Score is trying to make sure everybody gets a chance to have a good score. As you can see here, 38% of people are in that 661 to 780 range when you're doing the exact same things and to get so essentially a lower score here. Okay. So that's essentially what that is. The stuff you do with your credit, you're going to get more points in Vantage Score. Now, Vantage Score is going to be stepping up big time. So I'm going to keep you guys posted. It's most definitely some things going to be in place after the election. I think they're going to be on the table for a realistic mortgage option, especially when they move these rates around. So I'll keep you guys posted on that because there's been a lot of talk about this. And just so you guys know, FICO is on the list of the junk fees. Okay. It's not FICO them itself, but here's the deal. One of the junk fees is the price the price that they charge for, buyers to look at their credit scores. The lender pays that fee, but they pass that fee over to the buyer at closing. Every buyer pays anywhere between $97 to $150 for a credit score. Just so we're clear, if you paid for it on your own, you would pay $60 without a monthly plan. So my point is that is a junk fee that Biden is talking about in the administration. This is why they want Vantage to be an option, not just because it's free, but just because they wanted to have competition. They want to see the risk factor. They're going to test this out more, and I promise you, I'm going to keep you posted on that. Fannie Mae and Freddie Mac have already given the green light, so we're going to see what happens. Okay. Now, these are the credit scores that you have. So here's the deal. These are all the scores that you all have right here, right now. These are scores that are being used. All of these scores are being used, okay, from FICO. So when you first log into my FICO or when you go to the dealership or wherever you go, anytime that I'm sorry, let me step back, not the dealership, but like when you look at your credit in general, like these are your general scores. These are your FICO score 8s. Okay. These are your general credit card scores. Okay. Now the score 8 is different than your auto score 8, your bank card score 8. These are different ones. These are your overall scores. No one really, I won't say no one. When you're looking for an apartment, they look at your overall score. Okay. But not many other people look at your overall score. Okay. Now, when you're looking to get an auto loan, okay, they look at your auto score. All right. And these are the numbers that they've had. We're starting from the most recent. Now, the auto score 9, it is available, but a lot of dealerships still use the auto score 8. Okay. That came out around 2008 and they've been using that since then. Okay. Same thing with credit card applications. The 9 is available, but some banks use a 3, some use the 8. So it just really depends. Mortgage applications. Okay. Now this one is used now Experian, as you guys can see too, they don't all use the same scores. Okay. There's scores that they like for certain situations. They want this to be irritating. They want this to be confusing. And because they know if you got to put a little more work in, no one's going to care enough to figure this stuff out. That's why I'm here to break this stuff down and make it simple and easy for you. So the short version is just know that anytime you apply for something, you have a credit score category for that something. So if you're applying for a credit card, that has a credit card category score. When you're applying for an auto loan, mortgage loan, personal loan, credit card, right? Those are the most commons. Okay. Everything else is going to be your overall score. You guys keeping up with me? Okay. So now this is the mortgage application scores. You don't have to remember what specific scores they are. Just know you can see all of these scores at myfico.com. Okay. So let me go back. Again, myfico.com. You can see all of your scores. It will not affect you in any way, shape, or form. All right. Next, now, again, FICO scoring models update approximately every 5 years. In 2009, they've been rocking with the FICO 8 for quite some time. 2014, the FICO 9 did come out, but they have no interest. Like a lot of places still don't use it. Then 2020, FICO 10 came out, 10T. 10T, don't forget 10T is not taking in effect paid collections. So that's extremely good. But again, they are not, a lot of places have not implemented. They still haven't implemented FICO 9. So again, they could come out with as many scores as they want. But all these scores keep changing all the risk factors, and it only makes it seem as if there's one option to go by. It's FICO or nothing at all. That's why they want some competition. All right. So now, either way, just another reminder, guys, if you have a goal to go into homeownership, go ahead and scan that QR code, learn more about our home buying challenge inside of our 850 Club Elite community. All right. And again, go ahead and like this video, share this video, and subscribe as well. Let's go and jump into the comments. Let's see what you guys think about that. Did you guys learn something this evening? All right, let's go and get into the comments real quick. Let me go ahead and change how my stuff is looking too. Okay, good. Our Lake is in the house. LA is in the house. All right. Shabuzi's in the house. All right. Winnie, what's going on? All right. So when we apply for our mortgage, they use the middle of the big three scores. That's right. So you are applying for a home loan. They use your middle score. Your middle score is calculated by doing this. You drop the highest score, you drop the lowest score, and the score that's remaining is your middle score. Now, again, can only be seen two ways. There's only two ways to see your mortgage score. Way number one is to go to a mortgage lender. Way number two is to go to myfico.com, get the advanced plan. It's $30 a month. You don't have to keep it. It's up to you. Or you can buy each individual report, but that's going to cost you $20 a report. So you can either pay $60 one time or $30 a month, but just cancel once you get the plan. That way you don't have to pay for the next month if you don't want to keep the plan, of course. If you do, go ahead and keep it. Either way, you can see your mortgage scores. So let's say, for example, your mortgage score is a 610, a 620, and a 630. You drop the highest, 630. You drop the lowest, 610. What's left in this example, 620. Okay. By the way, all you need is a 580 middle score to go into home ownership. All right. So thanks for sharing that, Winnie. So Equifax is the middle of the three scores. Very good question. So it's not necessarily the bureau itself. Any bureau can be the middle score. They go by what score is in the middle. So if you got let's say a 600, a 650, and a 680, right? 600 will be the low, 680 would be the high, 650 would be the middle. So that would be the middle, regardless of what bureau that is. And that's how they go about it. So great question on that, Winnie. Winnie says free is good. All right. Brenda says interested in the documentary. Oh, nice. Okay, good. All right, cool. So here, I will keep you guys posted. I've been kind of playing around with different pieces of content, on the channel. So of course, I do care about you guys actually not just watching it, but enjoying it as well. So I'll keep you all posted because don't get me wrong, I love sharing updates and news updates, stuff like that. We'll always keep that stuff coming. But sometimes I actually want to tell the story behind the story. Not just the new stuff. The new stuff is always cool. We'll always keep bringing videos, but I want to take you guys, back because sometimes I think some things go by so fast and people don't really go deep into detail. Like nobody really talks about FICO. Nobody really talks about the history of VantageScore or how we got to this point of using credit or the U.S. credit system versus everyone else's credit system. So we got some good stuff coming up. So I'm most definitely keep you guys posted, as well. All right. So thanks for letting us know that, Brenda. Arley says the more videos, the better. Absolutely. Winnie says the more, the better. Absolutely. No problem at all. So Brian says, does Discover use FICO or Advantage? Very good question. there's a 90% chance that they use FICO. Okay. Most companies are going to use FICO just because of convenience, as well as they've been used to doing it. It's not just habit, but they've been used to it. They don't, here's the thing, banks don't want to make the wrong decision, right? They know everything that's going on the front end, right? What's going on the front end? We talked about a little bit about that yesterday, right? Trade lines, right? They know that people are really 500 scores, 400 scores, 600 scores, but they're getting trade lines. They're getting stuff wiped off their credit reports. So they can't really trust it. They get an idea, but they can't really trust it. So because of that, they say, okay, since we are kind of doing this anyway, let's at least give FICO some competition. Because FICO, think about it, when companies don't have competition, they can corner the market. They can corner the market. For example, a lot of people are not watching TV anymore, right? How many of you guys still got cable? How many of y'all still got cable? Let me know in the comments. But here's the deal. Watch where I'm going. A lot of people are watching streaming applications like, of course, like the big ones, Netflix, Peacock, all that other stuff, Disney Plus, and of course, YouTube. Watch where I'm going with this. It's going to be the internet providers that's going to be strong arming people, and they can easily go up on the price of internet because they're not making money on the cable side anymore, right? So, for example, you got Xfinity, Comcast, whatever, they're going to be cornering the market unless they get some real competition. Now, in some areas, there's AT&T, but you guys get what I'm saying? If it's not a lot of competition, then they're going to try to corner the marketplace, okay? But until that happens, FICO is still running the game, all right? And so we'll keep you guys posted on that. Arlake says, my score IQ has your FICO score free for a week. Awesome. And there's a lot of ways to actually see your FICO scores too, guys, for free. But that was the only way to see all three or more of or just essentially all of your scores and your category scores, seeing exactly what the bank sees. If you are about to go to the dealership and you want to know what your auto loan scores are, my FICO is going to have that. If you are about to go into homeownership and you want to see what your mortgage scores are so you don't waste your time, waste the lender's time, waste getting a hard pull, right? You can see that on myfico.com. That's what we tell people, especially in our home buying challenge, is if you want to see what the lenders see, you got to go to myfico.com so you can actually see all of those category scores. Okay. But you can get them for free. You can go to freecreditscore.com. Experian bought them out years ago, and you could actually get a free FICO score through Experian. Okay, so you can get some scores for free for sure. But if you want to see everything, you're gonna have to sign up for that plan. All right. Next, Brian says, yep, I got you. Okay, we answered that question. Winnie says, we're in the very good according to FICO and good according to Vantage. Great job on that. Okay, most definitely great job. That means you guys are well in the high 6s and the 700s as well. My Score IQ will show all of your FICO scores. Yes, they will show some. They will show some. There are some that they are missing. There are some that they are missing. They do have a lot of them though. They have about 75% of the scores that you need to see, but they don't show you all of the category scores. But they show you way more. Honestly, they're showing the second most outside of myfico.com. A lot of places don't even go too deep into categories. Like, for example, if you guys get the Experian paid plan, I think that's like $25 to $29 a month as well. They show you category scores, but they only show you category scores for Experian only. It's so biased on Experian, man. They literally make their own rules over there. All right. Winnie says, I'm always learning from you. Absolutely. Greatly appreciate you being here. All right. So Helen says, okay, I'm keeping an eye on my credit score, and it was a 684 and has been like that for a while. Dropped 40 points. Why no activity on my end? Listen, this is a very good question. Scores drop all the time, guys. Scores drop all the time. And a lot of times it could be, sometimes it's good history that has fallen off. Sometimes it is student loans that's in deferment. And, just so you guys know, if you have multiple student loans by the same originator, you need to get them consolidated. Consolidating your student loans is free. All that means is combining all of your loans, assume you have more than one, combining all of your loans into one. That way you get one interest hit versus multiple interest hits. What's an interest hit? Anytime that loan balances are growing and not reducing, that affects your algorithm. That affects the score. A lot of people don't know that. Every time, listen, if you have student loans in deferment, your credit score is that still affects your credit score. But since you have all these other on-time payments, you're not seeing it. So you see a 10-point jump when you really could have had a 13-point jump. You see a 40-point increase when you really could have had a 45-point increase. So it doesn't really slow you down that much. But and I want you guys to look at it like this. Deferment means you can pay me later. Deferment means you pay the money later. Okay. But it's still a loan on the credit report. Watch where I'm going on this. Watch where I'm going. So an auto loan, if an auto loan balance grows, it's going to affect your credit score. Because the only time that a loan balance would grow would mean what? That means you're not making monthly payments. So again, it does affect your score in hindsight, but it may be some other things as well too. All right. So let's see here. when he says when I ask about cable, when he says not me, I do not have cable anymore. RLA says I have cable still. Wow. Okay, that's okay. Good. So it's still people out there. Helen says no to the cable. All right. When he says we got our first net service from our phone company, they are in the process of running fiber in our town. Absolutely. Right. They absolutely. So I know there's a lot of cable companies switching some things out there as well too. Succeed in two is here. Vanessa says, I have multiple student loans with the same lender. How do I get them consolidated? Very good question. So to get your student loans consolidated, all you have to do is just call them and then they'll walk you through their consolidation process. A lot of student loans right now are still with AidVantage and NailNet, but you could just call them. So whoever has your student loans, just get them a call. They will have to have you fill out some paperwork to consolidate them, but it does affect your credit scores. Okay, guys. Floyd says that Vantage 4 score is still very hard to get for most people. It is. And you know what's crazy is that no one is really showing it either. Like even on the consumer side, like Credit Karma is still using Vantage Score 3.0. So outside of it's not really, that's the thing with Vantage. They're still making a lot of tweaks to it. But they're most definitely making money off of it. They're selling it left and right, So, and again, we're going to be seeing some changes coming, especially with that banks, with the Vantage 4.0 Plus that they just rolled out as well too. So we'll keep you guys posted on that as well. Brian says, on my FICO, what's the difference between the advanced and the premier option? There's a $10 difference. Very good question. Very good question. So now, when you go to myfico.com, you have the advanced plan for $29.99 a month. That one is going to give you access to all of your credit scores. Okay. Now, you're going to get daily updates if anything changes, like with your scores or any like identity type stuff. Okay. Here's the catch, though. You're going to get your score. So you will be able to see your overall score updates, but you will not be able to see your category score updates for $29.99. What does that mean? That means that, let's say, for example, you pay $29.99 today. You're going to see all 30 of your credit scores today, but you will not see all 30 of your credit scores again, like updated until 90 days. So it updates every quarter for $30 a month. And of course, you still get the regular score updates, but that's just your overall scores. So why does that matter? Let's say you're looking to go into homeownership. A lot of our clients are doing this literally as I speak. They're watching their mortgage scores like a hawk because they know we're looking for certain numbers for certain clients to go ahead and start the home buying process. So let's say, for example, you're paying the $30 a month. It is June. Your scores is 10 points away. Would you rather find out if your mortgage scores are 10 points away a month from now, or would you rather find out 90 days from now? Duh, you want to find out like next month, right? So in that case, you would have to pay the $10, okay, more. That's the $40 a month plan, okay? It's $39.99. That plan is going to show you all 30 scores and it's going to refresh every 30 days versus refreshing every 90 days with the advanced plan for $30, okay? So hopefully that answered your question there as well. Succeed in 2 says, I cut the cord in 2018. No cable. I'm not giving my money away. I stream. Okay. Absolutely. Absolutely. Leon says, I have a 771 Experian, FICO V8 score, and Credit Karma still has me at 726 TransUnion and Equifax. Which are accurate scores? Is Credit Karma accurate? Yes, Leon. So Credit Karma, it is accurate. It's just a different algorithm. And so Credit Karma more so looks at what you've done recently. That's the only thing I don't like about VantageScore is that they look at what you've done recently and they feel like if it's trending in a certain type of direction, which by the way, that's where the FICO 10T stole that move from VantageScore, is looking to see where school, like what's been happening recently. So a lot of times if it feels like you're moving your balances around too much, it's saying, oh, there's a slight risk, and that will be your score. But as far as accuracy, both scores are accurate. It just depends on what you're trying to do. So if you're looking to buy a home, I mean, honestly, for most cases, 85 to 90% of the time, they're going to be looking at your FICO scores, guys. Always know that for now until further notice. Keep in mind, the Vantage score is most definitely making progress. Now, I know, now mind you, Credit Karma, Vantage Score, this stuff has been out for a very long time. I think it's like 2014. Okay. So I'm talking about Credit Karma when it first came out, when it only had TransUnion. It didn't have Equifax. I'm talking about, like, I remember that. Okay. Back in the day. I'm saying this to say, again, they're making strides. They've been doing this for 10 years, but they finally got it on. They finally got the conversation on the table to that FICO needs some competition. Okay. But either way, they're both accurate, but the days are coming soon when you're going to call a dealership and say, hey, which bureau do you guys run? I'm sorry, which algorithm do you guys use? Oh, we use VantageScore. Oh, we use FICO. Right now, everyone's using FICO. Okay. But the day will come. That way, you know what you're working with before you go. Okay. So just keep that in mind. So great question, Leon. Give Me Cash said, I had 22K on my Navy Federal card with almost 18,000 used. I dropped it down to 3,500. Score was 703 after I got my usage down. Credit shot up to 840. It most definitely can do it, especially if that's the only card that you have, or not necessarily the only card that you have, but the only one like with a certain type of balance. Guys, paying your balances down is huge. It's most definitely huge. Vanessa says, I feel like we shouldn't have to be paying all that money to see real scores. Vanessa hit it right on the head. Vanessa hit it right on the head. That's exactly why. Honestly, that's the reason why. That's the reason why VantageScore started in the first place. Before VantageScore came out in 2012, 2014. Before it came out, there was no alternative. So they could charge whatever price they wanted to. And the lender says, well, we're not going to pay for that. We're going to send it to the buyer. Buyer just pays it at closing. It's been going like this for years. But now that someone's looking into it, it's like, hey, what's going on here? But you're not giving buyers an option, an opportunity. It's cheaper if they buy it themselves. If it's cheaper if I go to myfico.com and actually give you guys my report, right? It's cheaper. But either way, they don't want that to happen. They don't want that to be the case. But Vanessa hit it right on the head. She says we shouldn't be paying for it. We shouldn't. And that's why come on, man. Like, here's the deal. We shouldn't have to pay for all this stuff, man. Like, y'all the ones that created the score. So, and now it's like a money grab. And don't get me wrong, I get it's an algorithm, but if it's going to have that much control over what we do as an economy, then that means the government needs to get involved. And that's just what it is. So, and that way we don't have to pay for it. But right now, they're considering credit score. They're considering paying for credit scores a junk fee. So stay tuned, man. It is on the table. It's most definitely a Biden election move. I ain't gonna lie, but it's really not him though. I'll give this here. This has nothing to do with politics. This has everything to do with what's going on behind the scenes on financial decisions. It just so happens to be election season. But watch this. The Consumer Financial Protection Bureau has been busy. They're the ones who put it on the table. They say, listen, because people have been complaining. I mean, I sell, like, I'm in real estate, and people always look at their closing costs and say, man, why do I have to pay X? Why do I have to pay X? And it's like, nobody really just explains it. Like, they say, hey, this is what's due, and there's no way around it. But either way, we'll keep you guys posted, but changes won't go into effect until more than likely after this next election. So Arlake says, FICO doesn't report rent reporting. Very good observation. They actually do. Here's the difference though. Watch this. FICO 10 and FICO 10T is the only ones that will factor it into their actual algorithm for scoring. Okay. So it will show up on the report, but it won't affect the scores as much. Okay. It won't affect the scores as much. That's number one. Number two, A lot of rent reporting companies are not reporting to all three bureaus. Keep that in mind. So now that's when rent reporting had really just started. Rent reporting has been like, man, it's been a hot topic for years. Rent reporting really started heating up around 2016, 2017. So really, 2018, really. And then back then, it could only be on one bureau. So make sure it's on all bureaus as well. But the FICO 10 and FICO 10T does allow it inside of the algorithm. But again, a lot of places aren't using them. But I have seen scores not just go up if it's added to the bureaus on the FICO side. So make sure you guys double check that out as well too. When he says all we use is internet, both hubby and I are on YouTube 100% of the time. Listen, that is most definitely the future for sure. Fozzie says, if you have a charged off auto loan, could it stop you from getting a mortgage since it's two different categories? Very good question. Y'all learning up in here tonight. So very good question. Anytime you do something good or bad with something that ends in the word loan, is going to affect majority of your loan scores, okay? Because those are similar scores. So for example, things that end in the word loan, auto loan, student loan, mortgage loan, personal loan. If you're late on a personal loan, it will affect your personal loan scores more than your mortgage scores. But you better believe it will affect the mortgage scores in some way, shape, form, or fashion, because that's how it's created. How else can you create a mortgage score if a person doesn't have a mortgage? How can you create an auto loan score if a person doesn't have an auto loan? And then so they extract data from how you use your normal accounts. And then if you have something similar, like for example, is normal accounts, similar accounts, exact accounts. So normal accounts is you got credit cards. Just by having credit cards, you're going to have scores in all categories. You don't have to have something in that category. So that's number one. Number two is similar category scores. So for example, loan to loan, right? And that's usually most of everything's going to be loans on there outside of credit cards. Okay. And then of course you have the actual category itself. You get an auto loan, your auto loan score will most definitely be affected the most, good or bad, good payments, late payments, whatever. Okay. So keep that in mind. But no, to answer the question directly, if you have a charge off auto loan in general, it will not keep you from going into home ownership. Okay. Almost nothing stops you from home ownership, to be honest with you guys, except for like being in a chapter 7. Being in a chapter 7 or trying to do the home ownership situation, and it hasn't been at least 2 years from after a chapter 7 bankruptcy has been discharged. But in most cases, whether you have an eviction, and repossession, child support, whatever, they're just going to factor against your buying power. So it may affect your how much you can buy, but it most definitely you can still go into home ownership for sure. Okay. When it says that's awesome, congratulations. Absolutely. All right. So Succeeding 2 says exactly, now they're making money off of us. Man, exactly. Absolutely. Absolutely. When he says no, people shouldn't have to pay for their own scores. It's all greed. See, and that's why the conversation is on the table. All right. So now, Give Me Cash says, is it true the car dealership will pull your lowest score from your credit report to drive up the interest rate on their car purchases? The answer to that is actually no. So check this out. There is a good side of dealerships, and then of course you have the greedy side. I'm just gonna be honest. The good side is they're gonna always use one. They can't see your lowest score. They want a bank to approve you. You guys got to understand something. They can't make money without an approval. They can't make money without an approval. Now, every approval has different terms. One approval may say, hey, give them an interest rate of 10%. Oh, y'all really finna get mad when y'all hear this. Watch this. And I got to go more into the car secrets, man. Oh man, it's a lot of stuff we got to dive deeper into that. But let's say, for example, you have a bank, and this is something that you guys can ask to see. But I've seen this in real time, and they don't always tell the buyer what their options are. Bank one, let's say one bank says that you get 5%, but they a 5% interest rate, but they don't allow anything to be added additional to the loan. But they give the finance person, no, let's just leave it at that 5%, and they say nothing else can be added to the loan. Then there is a bank 2. Bank 2 says we'll give them 4%, but we'll let you go up to 6% if you need to add some stuff to the loan. Watch where I'm going. Why does this matter? When you go to the dealership and they say, "Hey, do you want a warranty?" Well, no, this. Well, all right. How much if I get the warranty? How much is it going to be? My payment right now is 400. If I get the warranty, how much is going to be per month? You'll go from 400 to 435. You want to get the warranty? And he said, "No, no, no, no. I really want to stay. I really need to stay close to 400. I just want to kind of get an idea of what it's going to cost." All right, all right, all right. If I can get it to like 415, 417 a month with the warranty, you think you could do that? Yeah, I could probably do that with the warranty. They're moving the interest rates. See, you guys didn't know that, did you? Of course not, man. Oh, that's a whole nother video. It's called the buy rate. Okay, it's called the show rate and the buy rate. The buy rate is actually what they can actually sell the deal at. The bank essentially gives them a spread, 1 point, 2 points, sometimes no points at all. They say, listen, 5%, and you can't add anything. But usually they only get usually that's not the case. Usually that is the case at a higher interest rate because they just don't trust. They don't want to be adding stuff to the loan, packing it in, especially if they think a person is not going to pay them. But usually if a person getting 5%, that's actually a pretty good rate. Anything that's single digits is usually pretty decent, and they're going to always allow some back end stuff. Back end is, front end is, hey, I want the car. Back end is, all the stuff that you can buy, warranties, maintenance plans, stuff like that you can add on, but they can move these interest rates. We'll talk about this stuff on another video, man, and I'll keep you guys posted. All right. So, but to answer that question directly, no, they do not look at the lowest score. They look at the highest score. If anything, they want to get an approval so they can keep adding stuff. All right. Next, HR says they pull FICO experience scores. I think he was talking about with the Discover question, but to answer that is FICO for sure. Succeeding 2 says, boom, rent reporting reports to all three. That's right. Oh, boom, rent reporting. Absolutely. Boom, rent reporting. It's a few of them as well that do it as well. So here, if you guys are looking to get your rent reported, I will put a link inside of the chat. So if you guys are looking to get your rent added to your credit reports, you guys can you look at the link inside of the chat. Okay. So next, let's go into the next one. We're going to be wrapping up here soon, guys. All right. Let me see here. I want to make sure we don't miss anything. Okay. So Fozzie says my TransUnion FICO score is 660. My TransUnion Advantage score is 510. That's over 100 points difference. How is that? I don't know. Yeah, I mean, make sure that everything's updated as well too. That's a far off situation. So make sure that you're looking at something that's updated. To the T. Look at all the accounts should be there and things of that sort, but it shouldn't be that far off. For sure. Okay, so take a look at that as well. Leon says installment loans. Absolutely, that most definitely. When I was talking about that, that most definitely could affect it for sure. All right. So CD2 says the interest rates will be higher though, right? When you're buying. Yeah. Interest rates. Well, here, if you could, I forgot what I was talking about. If interest rates are a little bit higher when you're buying a car versus leasing a car. I think that's what you meant. But if we're talking about just buying in general, it depends. It depends. Like the shorter that you have, the bank's money, the lower the interest rate is going to be. I don't think people talk about that enough because there are some people that don't like the interest rates at 5 years, 6 years, but the interest rate is much lower at 3 years and 4 years every single time. Now, is the payment higher? Yeah, because it's a shorter period of time. But if you guys are really strict on like interest rates, just give the money back sooner. But then obviously now you got a higher monthly payment. So are you able to swing it? Okay. So Q Turner says, if you had a bankruptcy and less than 2 years, but bankruptcy off the reports, can you get a mortgage? Very good question. This is a great question. It's a great question. Watch this. So bankruptcies are in the public database. It's public record. So really, in all honesty, when a lot of, well, I won't say a lot of, so let me just keep the topic where we're at. Bankruptcies, there's a software called Fraud Guard. Fraud Guard. We can't get access to it. Don't you worry. As consumers, mortgage companies have access to this. You know why they have access to this? Because they know that things are not on people's credit reports. Anything that is government, county, state, like government related, they're going to see it. So child support, they're going to see it, whether it's on your credit report or not. Okay. Um, Student loans, whether it's on your credit report or not, they're going to see it. See, people won't tell you this stuff because they're not in real estate. They these are people that just say, "Oh yeah, man, get this stuff wiped off." They selling you something, and but they're not preparing you for home ownership, not accurately. They're gonna see it. They're it. No matter what you get removed. Now, I'm sorry. Anything that has to do with governments, county, state related, they're going to see it every single time because it's public record. In most cases, those things are public record. Okay, and of course, like I mentioned, so yeah, so student loans and of course bankruptcies as well. Okay, so it could be off of your report. That doesn't mean so if you do, let's say for example, it does you get it removed off your credit report. At least you get the points, but they still know that it's there, so they don't factor it back in. They can just see it. They don't really too much care about the bankruptcy. More so, they more so care about what you've done after the bankruptcy. They care about more so what you've done after the bankruptcy. Okay. So Seeding 2 says sometimes dealers make money on us, charge extra points. Absolutely. Absolutely. But they can't outside of selling additional stuff, there's really nothing else they really can make money off of. Now they do make a little bit of money on the rate. For example, if the bank gives them a buy rate of 5%, and then they show you 7%, and then you don't go back and forth about the rate, for example, then they make money on that spread of the rate. They say, hey, listen, this is the lowest we'll go, this is the highest we'll go. Close them at whatever you can close them on. So just know that. We'll make another video on that as well, too. Vanessa says that's how they add all those that extra BS we don't need or won't. Absolutely. They can move that rate. And when you're moving that rate, you can't see if the payment is changing. Like sometimes you could pretty much get like almost like a free warranty or free gap if you move the rate. Think about it. If you are at 7% and you have a certain monthly payment, but then you drop it down to 5.5%, but then you add on like the package, the payment won't change because you lessen the interest rate, but then you also added on the package. And that's what happens every single day. And worse, some people are getting slammed, not slammed like busy, slammed like you don't even know it's on your paperwork, you signing it and you driving off. You know, man, woo, we got to talk about that. That's a whole nother video. The Seeding 2 says, I actually see my paperwork to make sure the finance guy added no points, greasing their palms. Absolutely. Recess says, wow. Yeah. I got so much stuff to tell y'all on that one. So Vanessa says, can you ask them to show you all the bank approvals and rates, or will they lie and say only one bank approve you? Man, Vanessa, you asked some great questions tonight. So unfortunately, it's usually the latter. They'll say that one bank approved you, but you can see for yourself. Like they don't have to show you. Like they don't have to show you anything in reality because it's their inventory, it's their approvals. This is why you want to actually have a conversation with the finance person prior to viewing the vehicles if you can, or bring your own financing. Okay. But I'm saying it to say that's the guarantee that you see what you want to see. But is it a deal killer? Will a dealership let you walk out if they don't let you see the numbers? I don't see that happening. They most definitely will let you see the number. I mean, I don't see a dealership losing a deal just because they didn't want to show you numbers. To me, that would be stupid. Okay. So I don't see why that wouldn't happen. All right. Plus, people have walked out before. So keep that in mind as well. All right. Now, isn't it by law that they have to remove a hard inquiry if you didn't get anything they pulled your credit? That is not a law. That is not a law. And a lot of people be saying that too. That is not a law. Someone reviewing your score is someone reviewing your score. That's called and that's part of the Fair Credit Reporting Act. Okay. And it's no different from a soft pull or a hard pull. But if you get denied, that has nothing to do with the bank. That has everything to do with the qualifications and you applying. That's the whole point of inquiries being on there for 2 years. Because if it was law, then there would be no 2-year rule. Okay. And so don't get me wrong. And I'm not trying to come off in a certain way. We don't know what we don't know. But sometimes people just say stuff just to make us feel good and say, no, they shouldn't do this. Most of the time that people saying that stuff is against the law with credit, they are inaccurate, man. They just trying to find, because think about it. Come on now. Let's keep this on a kindergarten level. If I let you borrow money, you have to pay it back. It's that simple. It's not like, well, you know what? No, man, you borrowed the money, but then somebody else bought the debt, but then they put it back on. They crisscrossed it. Stop. Stop. Y'all won't learn because y'all know I won't, because I'm not going to send y'all off like that. All right, next. So Season 2 said that's why people need to negotiate their deal and stop saying how much they want their payments to be all day long. All day long. RLA says I got pre-qualified for my auto loan through Capital One. Yes. Yeah, a lot of people actually get that through in the mail. So those are legit, guys. So when you guys get that in the mail from Capital One, that is legit. Fozzie, sometimes due to errors indicating something is wrong. Absolutely. It Girl says, not a fan of rent reporting. Lates can't be disputed. Very good question. Very good question. So when rent reporting is done to your credit report, there are companies that only report positive payment history. That link that I put in the chat, guys, they only report positive payment history. So if they talk to, let's say, your landlord, and your landlord says, hey, you know what, out of the 12 months, 10, it was on time, they'll go ahead and put only the on time on there. So most places will do that. Not all, but some. So make sure you guys ask that question as well. Vanessa says, best way to get collections off your report is when it's sold to another company. Absolutely, because they won't respond. All right. And Ceci said, I meant the rate. Exactly. All right, so Season 2 says, my sister taught me that about the rate. She had them show me the back end paperwork. Yeah, absolutely. Yeah, because they most definitely gonna do that as well, too. All right. So let's go and get up out of here, guys. When a lender closes an account on your credit report for several years, can they reinstate it? No, they cannot. But if they sell it, they can most definitely be reposted and go from there. And that happens too. It happens rarely with auto loans, but mainly in mortgages. Mainly in mortgages. All right, guys. So Seceding 2 says sometimes you'll get the other approvals in the mail afterwards. Absolutely. Yo, yeah, by that time it's late. It's too late too. And that's exactly why I secure my financing prior to buying the vehicle. You most definitely want to do that. But anytime you go like especially if you have your eyes set on a vehicle. Now, if you don't know what you want to get, go out there, test drive, do your thing first, then figure out the numbers on your own, and then circle back. Okay. Again, keep in mind, guys, dealerships are inventory only. They have connections at the bank, and you could do it all right there, one-stop shop. But you don't have to go through the dealership in order to get the deal. Okay, just keep that in mind. So again, dealerships are nothing but inventory. It's plenty of times when people come in with cash. It's plenty of time when people just come in with a cashier's check, and it's plenty of times when people have their own financing through their bank, credit union, or something like that. Okay, so it's not uncommon. Take your time, especially if it's a new car. They ain't going nowhere. Okay, they ain't going nowhere. Stacy says, "How do I get my credit score above 650?" We'll see. We'll see. Well, here's the deal, Stacy. First, I gotta honestly, there's about 1,500 videos on the YouTube channel, so you can kind of watch some in sequence and kind of go from there. However, I would say start off with my free ebook. Go ahead and scan that QR code, grab my free ebook today. And then that also asks you, and then once you get the free ebook, you get a free ticket to my free webinar. It goes right into it. I'm saying that to say though, if you want a structured plan, then you can go ahead and get a custom game plan. And once you get the ebook, it'll send you the information on all that stuff. Okay, so start off with the ebook first. And if you say, you know what, I don't want to do all that, then you can watch some of the videos. If you say, hey, Calvin, I want the accelerated situation, then my team and I, we look at your credit report and we can get you a custom game plan. Okay. When he says, right, if a lender sells your debt, it keeps going. Absolutely, guys. Absolutely. Vanessa says, let's do the car buying process ASAP. I got you. We can add that to the list. We most definitely can go into that for sure. All right. Let me know in the comments if you guys agree with Vanessa, if you guys want more information on buying the cars and stuff. Y'all know that's where I actually learned all this stuff. That's what actually started 850 Club. So, I got tired of seeing a lot of people get denied, for cars and not knowing why. So what I would do was I would actually write on the back of their credit reports what they needed to do in order to improve their credit scores. And then some people came back, some didn't. But I went from selling 8 cars a month to 20 cars a month. And those were originally the first credit game plans, the same ones that you guys get today. But either way, and it literally changed everything for my clients. And that's what started the 850 Club. So anyway, Seceding said we need to open our net and not so focus on the model shop. These competitors give opportunities for better deals. Absolutely. You right about that. Stacy says, sounds good. Thank you. Absolutely. Okay. Winnie says she would love to see that as well. Agree with Vanessa. And Stacy says, yes, please do the car buying process as well. All right. Miss Susu's in the house. All right. Appreciate you guys being here. And again, make sure you guys like this video. Go ahead and share it as well. And of course, we're going to see you guys on the next video. So stay tuned for that. Happy Father's Day to all the fathers that's claiming their kids outside of tax season. Okay. We greatly appreciate you guys. I'm going to put a photo up of my family as well, too. So you guys can tell me happy Father. No, I'm just kidding. So you guys, because I don't too much go into my family and stuff like that. But I'll most definitely show you guys some photos as well, too. All right. Let's get right into it. So today, guys, we're going to talk to you all about If you have a bad credit score, you or someone that you know, you don't like your credit score, these four accounts can fix them fast. Okay. Let's get right into it. All right. So, by the way, guys, if you haven't already done so, download our free credit ebook today. Okay. You can scan that QR code or click the link inside of your description below. Let's get right into it. So, the very first account is going to be an account that's only $5 a month. Okay. Again, this is $5 a month. All this is good for all credit scores. This can improve most credit scores simply because in most cases, especially with lower credit scores, okay, when the credit score is lower, it's looking for almost anything positive. Okay. And so the more positive activity that you have, the better your chances are to just adding something positive, but it has to be the right type of account. There's plenty of accounts. Okay. But I know that these four accounts can work for pretty much everybody and most credit scores. Even if you're in the 800s, these accounts can help you. Okay. So this one's good for all credit scores. There's no credit checks, there's no hidden fees, and there's a 98% approval decision. Okay. And they report this account to all three credit major bureaus. Okay. Now, if you guys want to learn more about this account, go ahead and scan this QR code. Okay. It's right there on your TV screen. Or if you're watching this on your phone, then I'm going to put the link inside the description as well. Okay. But scan that QR code. It's $5 a month. And what it is it's a credit builder account. You pay on it every single month. They report the payment history to all three credit bureaus. Okay. And that's going to help you improve your credit score. All right. Now, then let's go to the next account. This next account is $10 a month. Okay. So you got the one for $5. This one is for $10 a month. The company is called Kovo. Okay. And it's a credit builder. I've tested this out with many of my clients. Okay. There are many cases in which the game plans that I create, some customers, they'll order a custom game plan. That's where I look at their credit report and tell them exactly what they needed to do. This account is usually on a lot of those game plans because one, a lot of times people don't have certain amount of accounts. You need a certain amount of accounts. And instead of getting a credit card and getting the inquiry, instead of getting a personal loan and paying interest, this is going to help you big time. This is a credit builder account again for all credit scores. And we're talking if your credit score is under 800, you can benefit from this account. Okay, there's no credit check. This one also has no hidden fees. There's a 98% approval. Okay, 98% approval on decisions. And again, it reports to all three credit bureaus as well. Now, I'm not trying to add another bill to what you guys are doing. But you guys know how credit works, okay? Unless you keep getting authorized users, which unless they're your friends or your family, you can't control the situation. That means you're paying for it, like a trade line or something like that. For $10 a month for this to help you, this is huge, okay? Now, again, you may be saying to yourself, you know what, Calvin, I may have too many accounts. Who do you know that could benefit, that's tired of having a lower credit score? This can benefit them, okay? Again, most credit scores $10 a month. Scan this QR code to learn more about it and you can compare it. Okay. And of course, this is just another option as well. Now, if you do want like a custom game plan, if you're not sure what you need to be doing, but you know you got goals, right? You want to buy a house, you want to get a car. Listen, I helped all of these people. Let's just zoom in on like one of these stories here. This is a young lady where she told me she wanted to buy a car. Okay. She was tired of driving a certain type of car. And sure enough, I looked at her credit report. I'm going to zoom in on her. I looked at her credit report, guys. I told her exactly what she needed to do. And then, of course, right after that, she was able to get the car that she wanted. It was better than the car that she was driving. And listen, let me tell you something. She got a great interest rate. Okay. So you can have good credit. You just need, sometimes we listen, even Olympians, the best athletes in the world, what do they all have in common? They all have a coach. Sometimes you just need a strategy. You need a game plan. It's okay to ask for a coach. Someone is going to help you improve your credit score, qualify for home ownership, or whatever your goals are. Scan that QR code. The link is in the description as well if you want to learn more about that. Okay. Now, another option too. How many of you all pay rent? Let's jump into I just want to make sure I jump into the chat. We're going to jump into the comments too, guys. All right. So here's the deal. If you all pay rent, And here's the thing: we know what I love about about many of these subscribers that watch these videos, even the viewers that just watch the videos. Many of you all pay most of your bills on time. Many of you all pay most of your bills on time. Many of you all pay your rent on time. Check this out. With this account, you can get your rent added to your credit report. That's right. They even go back. So check this out. This is how it works. This is how beautiful this is. You pay to get 2 years. They go back as far as 2 years. 2 years rental history. Okay. They will add that to your credit report. Let me say that again. Rent that you already paid from last year and the year before, 24 months. They will add this rental history to your credit report. Okay. After you pay I think like $100. After you pay that, then it's only $10 a month. You can cancel it anytime. But here's my philosophy. Y'all ready for this? If you're paying rent every single month, and this is something you're paying every month anyway, it may as well be on your credit report. Watch this. Watch this. Did you know that now I look at a lot of credit reports. I make a lot of custom game plans for people too. When I look at these credit reports, maybe one, maybe two, but usually it's about 1 out of 10 that have rent reported to their credit reports. That means most of you all, right? Most of you all is going to be just like that. Okay. So now here's the deal. There's a lot, and no, don't get me wrong. There are a lot of platforms out there as well, too. I see someone just said in the comments that something is cheaper than rent reporters. Here's the deal. I don't know if they'll go back in time. So keep that in mind too. That $100 you're paying to get that previous rental history. Okay, that 2 years of history, and then you go from there. Okay. And they broke down, they break down the enrollment fee into 3 monthly payments as well when you sign up. Again, these are all options if you're looking for ways to improve your credit score. Okay. Now here's the deal. This also qualifies. Let's say, for example, and here, as you guys got questions, put your questions inside the comment section below. I'm going to try to get to most of these, okay, before we get out of here. Okay. But here's the thing is that even if you rent from family, if you all have a lease in place, okay, if you have a lease in place, that family member, that owner still can report that rent to the credit report, okay? But they have to be a third party. That's where rent reporters come in. Okay. So again, if you or someone you know is paying rent, doesn't matter what your score is, you may as well get these easy points. Okay. These are easy points. Somebody put in the comments, easy points. These are easy points. You're already paying rent anyway. All right. If you guys haven't done so already, make sure you guys go ahead and like, share, and subscribe. We are not done yet. Now, this is one of the best accounts out there. Here's why. An account like this didn't exist 5 years ago, 10 years ago, 15 years ago. People have been fighting for years to get their subscription services added to their credit reports. I don't think you guys are hearing me. We're talking Netflix, Hulu, Spotify. We're talking whatever you pay every single month. Every single month. There you go, Katina. Katina said, listen, it's easy points. Easy points. I'm telling you. Most subscription services, they cover. Now, how much is this? Now, this is how you can get all of your subscription services separately. I want you guys to understand something. Separate subscriptions. Let's break this down. They have a free plan where so this is how it works. The free plan is free for 12 months. After that, it's like $3 a month. But check this out. This is how it works. You're essentially paying them for the service of confirming that you paid your subscription service to the credit bureau. So you're paying them to confirm that the payment was made and to send that payment history, okay, to the credit bureaus. That's what you're paying for. So they give you $17 a month to spend on your subscription service. So let's say you have a subscription service that's like $12.99 a month. That's under the $17. And every month that you pay that $12.99, your normal subscription, whatever you normally pay, they're going to report that payment history to your credit report. Katina says, what about Amazon Prime, Audible, and Kindle? I think Amazon Prime is one of those. They add subscriptions every week. They've been adding subscriptions every single time I tell someone about this. They tell me, hey, something wasn't on there like a month ago. It's on there now, right? And so there are plenty of companies that you can add for sure. And it's not just cable stuff. They have your cell phone bill. Are y'all, listen, stick with me on this. Okay. Now, with the free plan, remember, it's only free for 12 months. Let me zoom in on this. I want to make sure y'all can see this. Now, don't worry, we got the QR code here, but I'm gonna zoom in. I want to make sure you guys can see everything. Okay, so that's this one. Then you have their most popular plan. This one is $6.99 a month. Again, that's the service that you pay for them. Then they allow you to spend $50 a month. And that usually covers about 2 to 3 subscriptions. Now, if you got 4 subscriptions and they're $10 a piece, or 5 subscriptions and they're even $10 a piece, then they're just saying that it's good for 2 to 3. But you can pay more. You can have more subscriptions being reported to them. Okay. So now you got to scan the QR code for this. I'm gonna put the links. Here. Let me put the links inside of the. I got the links for this. My bad. I'm gonna put these inside of here. I know I thought about the here they are, guys. I'm gonna put them inside the chat and I'm gonna put them inside the description as well. So we're gonna put these in here so you guys can actually see it. These are the credit builders that I talked about moments ago. This is the subscription service you're seeing right here. Okay. And there you go. This is where you can add all of your subscription services to your credit report. Okay. And I'll put the rental in there as well, too. Okay. Give me some time on the rental one. But either way, that's that one, right? So check this out. Now, this one gives you access to their premium subscriptions. So not every subscription is going to be a premium. I'm sorry, going to be part of the free plan. So you do better going with the $6.99. But this one covers all of the premium subscriptions. So like when Katia, let me see, let me go back up. When Katina says, is Amazon on that list? I believe so, but it's more than likely going to be premium. Okay. Then you have this one right here. This is $12.99 a month. But check this out. What do you guys see here? What do you see there? Your cell phone bill. That's right. Your cell phone bill can be the payment history. The cell phone bill payment history can be added to your credit report. That means every single month, the same phone bill y'all done have for a year, 2 years, 5 years, 10 years, 15 years. Now, they can't go back in time and add the previous history, but they can add every month thereafter. Okay. So look at all the subscription service. You know, the average household, the average person in today's world has at least 5 subscriptions. This doesn't even include their cell phone bill. Most of y'all watching this have at least 2 to 3 subscriptions. And guess what? It's not being reported to your credit report. You need to get these things reported to your credit report. Okay, you're already paying a bill. This isn't a new bill. Well, I mean, the service it is, yes, technically, but my point is, I'm not telling you to go buy like groceries or gas, or because remember that back in the day, people used to say, oh, well, get groceries, get gas. Everybody spends a different amount on groceries and gas. Groceries and gas have gone up, especially groceries. Back in the day, you could probably get groceries for a certain amount of money. Now you could almost max out a credit card if you get groceries every single month. Some of you all are maxing out your credit cards just on groceries. We can't do that anymore. You have to go with bills that are cheap that you pay for every single month to build your credit. Is this information helpful? Please let me know in the comments section if this is helpful. Now, let's go ahead and get to the comments. By the way, if you guys are watching this on your TV, now YouTube tells me that 60% of you all are watching my videos on your TV. This is why I put the QR codes up here, because we get emails saying, man, Calvin, you talked about something, but I couldn't scan it or I couldn't go to it. I had to find a video on my phone. No problem. I just want to make things as easy as possible for you all. I know, so listen, you all have goals, and listen, we have enough time to prepare for the goal. It's not about how many months are left in the year. It's not about next year. It's about when do you want to accomplish your goal? Let's get you in position. These interest rates are going to be coming down again. Listen, let me tell you all something. I'm not getting into politics. I'm not going to do it. Okay. But regardless of who wins on Tuesday, regardless of who wins, interest rates are going to come down. It doesn't matter because see the banks need people to buy. Okay. Now I'm I'm just letting y'all know. I'm not trying to be like, what, Calvin, don't say that because then we kind of feel no. I'm just being honest. The economy has to do something. You guys hearing this? It doesn't matter who wins. The economy has to do something. Now, all the other issues that have nothing to do with the economy. But my point is that you need to get in position. When these rates come down, you got to be ready to refinance your car. You got to be ready to get out that apartment that you say you want to go into a house. Or if you want to rent again, that's fine too. But at least you can get approved for a better apartment. Guys, it's time to upgrade our lives. It's time to level up. There's nothing wrong with leveling up. It's nothing wrong with getting a more reliable car. It's nothing wrong with wanting to live in a better neighborhood. It's nothing wrong with wanting to put your kids in a better school district. It's nothing wrong with wanting to have a lower interest rate. Everybody, listen, you're either positive and you say, you know what, I can do something, or you're negative. Some people are negative and they don't know that they're being negative, right? They say, oh no, Calvin, it's too late for me. That's being negative. Listen, there's most definitely time for you to do something, but you got to want to do it. I can't make this any easier. Okay. I make videos for you if you're in your rebuilding credit stage. I make videos for you all if you all are no if you all have now higher credit scores. I make videos if you're going to home ownership. I make videos if you want to get the credit cards, the auto loans. We make videos for business credit. We make videos for no matter where you are in your credit journey. Did you all know that one of our subscribers got over $12,000 for their business? We're going to talk about that this week. Okay. So again, we are helping everybody. Is this helpful? Please let me know in the comment sections if any of this is. These are the best credit cards for bad credit. Number one is going to be Capital One Platinum Secured Credit Card. Now, I'm going to tell you about the secured credit card, but I'm also going to tell you about their unsecured credit card as well. With the secured credit card, the reason why I like them is because they have a 3-tier system. What that means is that they actually have a different type of qualification. So if you give a $50 deposit, you can get a $200 limit. And now that's if you qualify for level 1. Level 2 is a $100 deposit for a $200 limit. And then level 3 is going to be a $200 deposit for a $200 limit. Now that's what the Capital One secured credit card. Nothing too fancy about it. Has a $0 annual fee. There's no balance transfer. Has a regular APR of about 30% right now. And again, you don't need any type of credit history. You can have bad credit, no credit, does not matter. Okay. Now, this is actually one of the few secured credit cards that you can actually add authorized users. You can actually add up to 5 authorized users on this credit card. Now, if you're considering going with the Capital One Platinum secured credit card, I strongly recommend you consider going with the Capital One Platinum unsecured credit card. And here's why. With the unsecured credit card, a lot of people get approved with credit scores that's anywhere between 550 to about, 650. Okay. So again, always apply for the Capital One Platinum card just in case, because again, they spend a lot of their time working with giving people approvals that don't have the best credit. Okay. So even if you get denied, I'd rather you get denied for the unsecured and then transition to the secured. Okay. So that's the first card is the Capital One. Real quick, if you're looking to improve your credit score for your personal credit and your business credit, you most definitely want to check out Identity IQ with their Score IQ. And not only that, but you can also add your utility bills to your personal credit report to easily improve your credit score. To learn more about this, the link is inside the description below. The next card on my list is going to be the Chime Credit Builder Secured Visa Credit Card, okay? Again, nothing too fancy, no annual fee, no balance transfer, no regular APR, because it's all based on what you use, okay? So now this one's set up a little bit different. You actually can have the Chime account and then have the Chime card. But again, if you just want to have the card, you can do that as well. And just like any other credit card, guys, make sure you're only using about 7 to 10% of the limit. A lot of people don't do that. They think they have to get gas. They think they have to get groceries, or they think it's like a set amount that they need to use per se. Here's the thing, because you don't have a lot of room to play with because the limit is $200, $300, $500,
you want to make sure that you're somewhere between about 7% to about 10% usage, okay? So what's the math on that? So let's just go ahead and pull out a calculator for those who don't want to do the math, okay? But either way, that's $500, okay? That means we need to be about $50 or less. But if you want to get exact, that's $500 times 7%. So that's somewhere between, that's $35. So that's somewhere between $35 to $50 a month to truly maximize your credit score. Now, that does not mean that you cannot use more of that, but if you use more of that, it will start to affect your score, okay? So we got number one, Capital One, the secured card. Then we have the unsecured card, but again, I recommend you go unsecured first for the application, then go secured. And don't worry, you can learn more about these cards, compare these cards down in the description below. And of course, the next card is going to be the Chime Credit Builder secured card. Next is going to be the Self Credit Builder account with secured Visa credit card, okay? Now, the reason why this card is a great card is because Self has really been on the move, really trying to help a lot of people. They have one of the lowest annual fees as well. It's only $25 for this annual fee. There is no opportunity to do a balance transfer. The regular APR is about 28.74%, okay? Now, keep in mind, for those who don't know, APR, you only have to worry about APR if you're going to carry a balance, okay? Carrying a balance means that you, let's say, for example, your limit is $300 and you swipe for $200, okay? Now, that means your balance is $200 and you have a $100, leftover balance, okay? That's what you can use. That's what they call an available balance, all right? And then you have the limit, okay? So now if you swipe for $200, that essentially means that you don't have much left to use over. You've already used 60%, okay? So again, you want to make sure that you're not necessarily carrying a balance. If you could put this on auto pay, pay it in full. I always tell people to start off with like a subscription service. So look at some of the bills you already have: Apple Music, Hulu, Spotify, gym membership, Disney Plus, Netflix, whatever you all have. Consider putting some of those on a credit card. That's number one. And then number two, putting that credit card on auto pay. When you put a credit card on auto pay, you don't have to worry about if the bill is going to get paid on time. You don't have to worry about that at all, okay? So that's going to be the next card. That's going to be the Self Credit Builder account with secured Visa. Next is going to be this Discover It secured credit card. Now, we know that Capital One is supposed to be buying out Discover. We'll see if that gets approved and goes through. We'll be one of the first channels to tell you guys about that update once we get it. But until then, Capital One and Discover are still separate companies, still separate approval processes. Everything is still separate, okay? So Discover is secured credit card. People sleep on this credit card. It's actually one of the best secured credit cards out there. Here's why. Number one is that you get rewards. As you can see here, there's not many credit cards that will give you rewards, just for having a secured credit card, okay? But you get 2% cash back at gas stations and restaurants up to $1,000 in combined purchases each quarter. And you don't have to do anything for that. That's automatically, okay? Then that's not it. You also get 1%. So you can earn an unlimited 1% cash back on all other purchases, okay? That is huge. Not to mention you have a $0 annual fee, and you can also do a balance transfer. Let me tell you something. Do you know how many secure credit cards do not allow a balance transfer? This now has to be one of the best secured credit cards that are on the market right now. Hopefully, when Capital One decides to go ahead and buy them out, we don't lose this credit card, because a lot of people that are looking to build their credit, rebuild their credit out of bankruptcy, out of a repossession, whatever, this is one of the best cards to go with, okay? But another reason why I like it is, again, this balance transfer. So for those who don't know how a balance transfer works, essentially what you want to do is, if you have any balances that are over, whatever, right? And any balances that are at an APR of about 20%, 18%, which is standard for credit cards, okay? But some of these APRs have been going up. Anyway, long story short, what you want to do is you could take that balance and you could transfer it to this credit card, okay? So that's how you can most definitely get and put yourself in a good position, for this as well, okay? So again, balance transfer 10.99 for 6 months. And then after that, the regular APR is 28.24%. And again, that's only if you carry a balance, which means you swipe your card and you do not pay that bill in full, okay? And again, don't forget This credit card is actually one of the few secure credit cards that will actually let you upgrade it from a secured card to an unsecured card. Okay. So once you use it for about 6 months, make your payments on time. They see that you swipe it, pay it on time, things of that sort. You're not late. You're good to go. And they're going to upgrade you from a secure credit card to an unsecured credit card. And I heard they give nice limits as well. All right. Next is going to be the best but no credit check. That's going to be the Open Sky secured credit card. Okay. Now, this is actually two credit cards. Okay. They just came out with their Open Sky secured Visa, but this one is a little bit different. Okay. So we're going to talk about the one you guys can see right here, and I'll pull up the other one here shortly. Okay. Now, the Open Sky secured credit card. Now, here's the deal. The only thing I don't like about this card is that you cannot add any authorized users. That's number one. Number two, it does not upgrade. Okay. You can't go from a secured credit card to a secured credit card with this credit card from Open Sky. Okay. Emphasis on this. Okay. The annual fee is not much, only $35 for the annual fee. No opportunity to do a balance transfer. We already talked about that. Regular APR is 25.64%. And then, of course, there's no recommended credit history. So what I like about this card, Open Sky pretty much approves everybody. If you've been denied at every bank, if you owe banks money, if you have repossession, child support, bank, I'm talking anything, evictions, collections, does not matter. Open Sky will approve you. Okay. Open Sky most definitely will approve you. Now I'm going to go ahead and pull up this other card that Open Sky has. You all got to see this one. So I hope you guys are still here for this one. Now the Open Sky secure credit card, this one is pretty cool because this one now comes with a different type of card. Now this one is the Open Sky Plus. Okay. So I'm going to go ahead and switch to this one so you guys can see it. Okay. And so now this Open Sky Plus credit card, you guys can see the difference here. Okay. So the one you all just saw was this one here with a $35 annual fee and a $200 security deposit. Now, that minimum $200 security deposit also becomes your limit, okay? And there's no credit check to apply. Everyone's going to get approved for this card. Remember, only use 7 to 10%. So $20 a month or less on this card. Put it on auto pay, build easy credit, okay? Now, they have another secure credit card where there is no annual fee, okay? So you're going to save yourself some money. However, this one's a minimum security deposit of $300. Now, don't get too caught up in the minimum security deposit. You know why? Because this credit card will actually take you from an unsecured credit card to from a secured credit card and graduating to an unsecured credit card. Okay, so this is the first time that Open Sky has ever even did something like this, and that is most definitely a game changer for Open Sky. Okay. And those are the best credit cards for bad credit. If you like this video, you're most definitely going to love the next one. And I'll see you.
Applying for too much credit at once. Now, a lot of times people have to understand something. You can't go from rebuilding your credit to, let's say, credit card stacking, okay? Because your score is not high enough to start doing things like that. So you really have to establish that base. So this is a common problem when people are trying to add too many accounts to improve their credit score too fast. And then what ends up happening is they forget about one factor, and that is... Hello everyone, today we're going to talk to you all about common mistakes to avoid when you're rebuilding your credit. Let's get started. So during today's video, we'll go over what those pitfalls are while rebuilding your credit. And then of course, you got to understand that rebuilding your credit is going to take time. It doesn't happen overnight, okay? So just like when you were improving your credit score at one point, it wasn't something that you could do on Monday and then see the results on Tuesday, okay? It's going to take some time, especially if you're rebuilding your credit, because that means you have some negative items on your credit, and you also may have some habits that are slowing you down from increasing your score overall, okay? And then also, we're going to show you all not just how to avoid those mistakes, but this will also help you ensure that your efforts are successful, okay? So let's go ahead and get right into it so you guys can understand the rebuilding process, okay? And then that way you can make informed decisions that's going to strengthen your credit worthiness, all right? By the way, we get a lot of people that ask us if we can help them improve their credit scores. We most definitely can, okay? Whether you're looking to increase your credit score, qualify for home ownership, lower your monthly car payment. Listen, we can help you. We can make a custom game plan for you after looking at your credit report, just like we help these people that you're looking at right there on your screen. All right. So now, first, you got to understand how the credit scores and reports actually work. Okay. So, credit scores, as we know, is a numerical representation of your credit worthiness. Okay. We know that our scores are anywhere between 300 to 850. All right. Now, lenders use credit scores to assess the risk of lending you money. Okay. Now, with credit scores, many of you all have access to Credit Karma. You may look at my FICO. Just do understand this. Doesn't matter what platform it is or what platform that the creditors are actually using, you need to know where you are. Okay. Credit reports detail your borrowing history, and this is going to include loans, credit cards, and of course, your payment behavior or payment history. All right. Regularly monitoring your credit report is going to help identify and address errors if you have any. All right. If you haven't done so already, make sure you guys go ahead and like, share, and subscribe. All right. So now, mistakes to avoid during rebuilding. Number one is going to be missing payments. Okay. On-time payments are the single most significant factor in improving your credit score. Okay. Number two, maxing out your credit card. Now, high utilization or high credit utilization, and by the way, this is anything above 30% utilization. So what does that mean? That means balance divided by the limit. So for example, if you have a credit card and the limit is 1,000, okay, and your balance is 300, if you take 300 divided by 1,000, you're going to get 30%. That's the most that you should be using on that credit card. Now, that's to really fluctuate the score. If you don't want to see much movement in your score, but you still want to kind of use your credit cards, then you really need to be anywhere between about 5 to 7%. Some people say even a little bit lower, but nothing more than about 7% utilization. Now, how can you do that? Real easy. All you have to do is find a bill that you have every month, something like Apple Music, Hulu, Netflix, Spotify, a gym membership, anything that's under like $50 to $100 or less, okay, depending on the limit. So just look at your credit card, multiply 7% times the limit, and that will give you the most that you can use without fluctuating your score much. And anything above that number, then of course is going to fluctuate your score unless you ask for a credit limit increase. Okay. Now, next would be real quick. If you haven't done so already, be sure to download our free ebook. You can actually scan this QR code or you can click the link in the description below. Now back to the video. Now, of course, as we just mentioned, utilization is essentially owing a large portion of your credit limit, which of course is going to negatively impact your credit score. All right. Number three is going to be applying for too much credit at once. Now, a lot of times people have to understand something. You can't go from rebuilding your credit to, let's say, credit card stacking, okay? Because your score is not high enough to start doing things like that. So you really have to establish that base. So this is a common problem when people are trying to add too many accounts to improve their credit score too fast. And then what ends up happening is they forget about one factor, and that is the average age of accounts. Okay. The average age of accounts essentially is going to make up about 15 to 10% of what makes your actual credit score. And so you want to make sure that you're not actually, getting too many accounts in a very short period of time, because again, that's going to affect that average age. And if it's too low, then of course that's going to keep your score kind of keep it from improving as best as it can. Okay. Next would be closing positive credit accounts. We see this all the time. Okay. Now, when we say this, we're mainly talking about when people have like a credit card and they say, okay, you know what? I don't want to use this credit card anymore, or I'm bad with this card. I keep overusing it. I keep overspending, things of that sort. That doesn't mean that you should close the account. Again, average age of accounts, not to mention the on-time payment history you get every single month. We need that solid foundation. Okay. So if you are in a position where you're rebuilding your credit, and by the way, rebuilding credit is typically anything that's under 650, under 620, you're rebuilding essentially. And when you're rebuilding, if you need to keep as many accounts open as you possibly can. Okay. Don't just let things go. That's going to make things difficult as we are in the rebuilding stage. Okay. But maintaining a long credit history with responsible accounts can benefit your score. Next would be not monitoring your credit report. Regularly checking your credit report allows you to identify and address errors. Sometimes there's a bill you may not know about. Sometimes there's a bill you may not know about that's not even yours. But if you stay on top of this, or if you have your alerts set up, then you'll most definitely be on top of it. Now let's dive a little bit deeper into each of those. Okay. So as we know, payment history makes up 35% of your credit score. Okay. That's the highest percentage of what's going to actually make up your credit score. Okay. So it's the most critical factor is going to be consistent on time payments, really just payment history, because obviously it doesn't just count on time payments. So it's just payment history in together. Okay. But missed or late payments significantly can damage your credit score. Okay. Number two, another crucial aspect, like I mentioned, is your credit utilization ratio. Now, this ratio, as I mentioned, is your balance divided by the limit. But again, the most that you want to use is 30%. But if you really want to be in that sweet spot, then that's going to be about 7% or less. Okay. But you don't want to be at zero. I want to make sure we understand that. Zero means that you're not using your credit card. So, like I mentioned, put something small on your credit card, put it on auto pay, you'll be good to go. Now, obviously, the other way around is going to affect your score as well. And that's maxing out your credit cards can negatively impact your credit score. Sometimes we don't even mean to max out the card. And what I mean by that is let's say, for example, it's a credit card that you don't use that often and the balance is, let's say, $500. It's very common, especially in this current economic climate, that you can have a limit of about $1,500 and a balance of $500. That's actually pretty good utilization. But since it's a credit card that you don't use that often, right now in this economic climate, they've been reducing a lot of credit card limits. And so if they drop that limit down to 1,000 or let's say 500, let's say they drop it down to 1,000. Now you went from 30% utilization to 50% utilization. And even though the bank did that move, it's going to drop your credit score because why? Your utilization. Don't forget, guys, utilization is the second biggest factor, 30% of what makes your credit score. Okay. So let's say, for example, 50% utilization from 30% is a bad look. Or worse, if they drop that limit down to 500, and I've seen even worse numbers than that, where they drop the limit well under the balance. Now it looks like the credit card's not only maxed out, but well over the limit. Here's another problem. They'll charge you an over the limit fee as well. So keep an eye on your credit card limits as you are rebuilding your credit. Okay. When rebuilding your credit, let's dive deeper into this. Avoid applying multiple lines simultaneously. Okay. I kind of touched on that, but each application triggers a credit inquiry. Okay. Now, credit inquiries is not the end of the world. The whole point of having credit, someone has to take a look at it. Inquiries only last 2 years on your credit report. We also have a product in which you can try to get some of those inquiries removed, especially if they were unauthorized as well. Okay. But each application that's a hard pull will be a credit inquiry, which can lower your score temporarily for just a little bit. Okay. While it may be tempting to close old credit accounts once they're paid off, consider keeping them open. Okay. Now, we're not talking about like the auto loan. Don't just stretch that out. If you could pay that off, pay it off, right? So you could pay things off, pay them off so you can just move on with your life. But if you're thinking about closing something just for the reason of closing it, don't do that. Okay. There's always a credit card that you can put on auto pay just to kind of just have it and not use it and things of that sort. But if it's an outrageous annual fee or if it's a financial situation, then of course, then it would make sense to do so. Okay. But just know it will affect your score. All right. So now, a long credit history with responsible use, that's a key word, can positively influence your credit score. Okay. And like I said, keep an eye on the report so you can watch out for inaccuracies and things of that sort along the way. So let me know your thoughts inside the comment section below. Let me know what you guys are dealing with out there as you're rebuilding your credit. I know some of this stuff may be basic to some people, but you'd be surprised. A lot of people do not understand it, or it wasn't broken down in a way where they could understand it. Okay. And because they say, well, you know what? I'm rebuilding my credit, but at the same time, I'm hearing I need to get this account. I'm hearing I need to get this account. I heard that I need to get this type of card or whatever. If you get too much of that, you have to be careful, especially not just getting advice from people, but watching things on YouTube and things of that sort, because some people, I'm telling you, most people have good intentions, but they don't know how to break down the information to say or give disclaimers and say, hey, listen, this is good if you are in this situation. You should do this if your score is here. Just because you hear about an account does not mean you need to get that account at this moment in time. Okay. There's a time and place for everything as you are rebuilding your credit. Okay. So make sure you guys understand that. Let me know your thoughts inside the comment section below. All right. Next would be strategies for rebuilding success. Okay. Now that we're working on rebuilding the credit, what else can we do? Well, number one, you can develop a budget and stick to it. Okay. This helps avoid overspending and potential missed payments. Okay. A lot of times people think they have a credit situation when in reality, you have an income situation. You're just not making enough. Okay. Or there's too much money obviously going out and you need to reduce your expenses. So a lot of times just looking at that budget most definitely will highlight some things as well. Number two, start with a secured credit card if okay, you don't want to have, let's say, credit builder loans, which we'll put some links inside the description below for some of you all to take advantage of as well too, especially if your credit score is under 650. If your credit score is under 650, 620, that's most definitely going to benefit you as well. Okay, even with a secure credit card. Now, secure credit card, this is an old, I won't say trick, but this is the old strategy that's been working for years. That's the purpose of having a secure credit card, is to help you rebuild credit, okay? But it will require a security deposit. In most cases, they graduate the card. A lot of banks are doing that now, or they turn that into another card. But in most cases, it's also refundable as well. But it'll be a valuable tool to establish a positive credit history. And you want to do it the same way. You get the credit card and then you put it on a small bill that you pay for every single month. Let's say, again, something that's under $50, under $100, that not only shows usage, right, every single month. So the bank is going to like that, but you don't have to worry about being late because it's already a bill that you have. A lot of times when people get credit cards, they think to themselves, okay, what can I go spend this on? It's like, no, we're not looking to spend this on anything. We're looking to make sure that we're staying the course and that we're paying our bills that we already have. Okay. Next would be considering becoming an authorized user on someone else's account. Okay. But make sure they have good credit habits. Okay. I've seen people become an authorized user on someone's account just because they thought that person had things in place, and it ended up dropping their score. And they were actually going into home ownership. So when they were trying to get closer to a pre-approval, they actually end up being further back and they have to wait another 45 days for us to get those points that they lost. So make sure that the utilization is under, at minimum under 30% at the most. Otherwise, being added to that card may not only drop your score, it may not move at all. So just keep that in mind as well. But being added to a trusted friend or family member credit card is going to be, and of course they're using it responsibly, can benefit your score and even for the long run as well. But again, keep an eye on that because sometimes around holidays, birthdays, anniversaries, summer times, things of that sort, people, it's their card. They can use it. But as they use that as they use that card, the balance gets closer to the limit and that can affect your score. Okay. Next would be paying down existing debts. Now, just because you are rebuilding your credit, it may be a charge off. It may be an old collection that accelerates the process. So a lot of times people put that off. They say, oh, I got this $150 bill. Yeah, but that $150 bill, collection, charge off, whatever, is costing you points. So if you're watching this video right now and you're trying to figure out ways to improve your score, look at what charge offs you have. What can you afford to settle? What collection can you afford to settle? What can you do for pay for delete, pay for removal, right? So there are ways that you can actually do this. Listen, it doesn't make sense to me how people will pay thousands of dollars for some type of credit repair and they have less than thousands of dollars in debt. Just use that money to pay these people off. And so don't just use that money to get things removed. Trust me, you would get a much better result. Think about it. If you get something removed, that doesn't mean that you've changed as a person, and not in a bad way, because we got to change habits, things of that sort. But watch where I'm going. So think about it like this. If you pay the bank that you owe, you rebuild that relationship versus just getting something removed. That just means it's not on your credit report, but it's still in their database. A lot of people think that if it's not on their credit report, they don't owe the money. We talked about that in another video. So make sure that you're on top of that because every state has a certain amount of time that they can take you to court regardless of it being on your credit report. All right. So, but either way, thank you guys for watching. Make sure you guys like, share, subscribe, and we'll see you on the next video. You can have the perfect credit score for $0. Number one, payment history accounts for 35% of the FICO score, which we already know. And surprisingly, they saw that those people with an 850 score basically have no reported history of missed payments, collections, or derogatory information. You can have the perfect credit score for $0. In this video, we're going to break down what the highest credit score you can have, what you need to do to get there, and some things that you may think are holding you back that aren't holding you back at all. Let's get right into it. Number one is open accounts. How many accounts do you need to have open in order to get an 850 credit score? You need to have at least 5 to 7 accounts. and that needs to be preferably a mix of accounts, okay? So now a mix of accounts essentially means that you have two different types of accounts on your credit report, okay? You have revolving accounts and then you have installment accounts. Revolving accounts are accounts that always change. Essentially, they revolve because what you may owe or what the balances may be will change. Those are typically credit cards, are those type of accounts. Then you have installment accounts. Those are accounts that end in the word loan. Okay. So for example, mortgage loan, student loan, personal loan, auto loan, all of those are installment accounts because essentially you're paying the balance in installments. Okay. So when you actually have on your credit report and you need to have 5 to 7 accounts, essentially this is just assuming you're going through the natural normal process of life, living in America, I should say, which you end up getting a car note, you end up getting some type of loan, whether it's a student loan, personal loan, mortgage loan, or something like that. Now, do you have to have a loan in order to get to 850? Not at all. You can actually get there with just credit cards. However, preferably is looking for a mix, okay, of revolving and installment. So it doesn't hurt to have an auto loan, a mortgage loan, but I don't want you to think you have to stop what you're doing in order to go get that, okay? Quick, if you're looking for a way to improve your credit score, we can take a look at your credit report and create a custom game plan for you so you can improve your credit score and get closer to your credit goals. You can click the link in the description below to learn more. However, we have seen people have an 850 credit score, as a matter of fact, as young as 24, without necessarily having to have a loan, okay? So just keep that in mind. But what's really going to hold that foundation is going to be number 2, and that's going to be how long you've had those accounts open. You need to have an average age of accounts of 8 to 11 years. So that means that if you've been only building credit for 8 years, 10 years, 12 years, whatever, it has to look at what are those average age of accounts. Did you have bankruptcies back in the day, rebuilt your credit, and now accounts are only 5 years old because of that? Or are you just starting to build credit? Either way, you need to have an average age of accounts of 8 to 11 years, which means you have to keep your accounts open. In order to keep your accounts open, that means you're using those accounts. That means you're keeping your balances low. That means you are actually showing banks and the algorithm that you're trying to get to this 850 score. Number 3 is going to be payment history, okay? Most of the payment history on your credit report needs to be at least 98%. That means that if there was a missed payment, that means it happened long time ago, okay? See, here's the thing that people forget about credit. Whether you have something good that happens, whether you have something bad that happens, it only stays on your credit report for 7 years, okay? And unless it's a bankruptcy, which is a chapter 7, that stays on your credit report for 10 years, okay? So that doesn't also mean that that can't keep you from an 850 credit score. You need to understand that whether it's good or bad, as it gets closer to that 7-year mark, that's when it's not going to have much value, much of a weight on your credit score, okay? So again, if you have flawless payment history with an old credit card that you closed out years ago, as all of that payment history gets closer to 7 years, it has a lower value on your credit score. So as you are building your credit, you want to make sure that you're still using that credit because again, the algorithm is going to be looking for that as well. Now, something that might be uncommon is that a lot of people think that you don't have to have any debts to be at an 850. It's actually the other way around. You don't have to have debt, but if you're still using your credit cards a certain type of way, again, banks are looking for you to have some sort of a balance. If for those who don't know, your credit score can actually be higher, not higher than 850, but essentially your credit score can be a little bit higher if you don't have a zero balance on your credit card. So even if you're using essentially around 7% ideally, but about 10 at the max, 7 to 10% of utilization, let's say, for example, if you have a $1,000 credit card, so 7% of that would just be $70. 10% of that would be $100. So you guys get the math. You need to be using that just a little bit. So that's number 1. But let's actually see the full list of things that people think are holding them back from a perfect credit score that is simply not doing so. Now, this is directly from FICO, and they're saying that if you happen to have a high achiever personality and are focused on improving your good credit score to the perfect credit score, which is having an 850 FICO score, here are some credit credit behavioral characteristics that were observed on a population of people that had an 850 FICO score back in 2019. Okay, number one, payment history accounts for 35% of the FICO score, which we already know. And surprisingly, they saw that those people with an 850 score basically have no reported history of missed payments, collections, or derogatory information. Number two, many people assume that in order to get an 850, you should have no credit debt. In fact, and perhaps somewhat surprisingly to some, we saw that the 850 profile has and uses credit with an average credit balance of around 13,000, okay, reported. And that doesn't include any mortgages, okay? So that includes credit card payments, auto loan payments, and things of that sort. And with their average revolving credit utilization tends to be relatively low compared to their available credit at about 4.1%. So many of these people are even under 7% of their available limits. Now, another way to think about that or to look at that in general is, after building credit for so many years, your limits are going to go up. And as your limits go up, the problem is that sometimes people have their balances keep up with their limits. You don't want to do that, obviously. You want to have access to a lot, but only using a very small portion. Next, most have a very established credit history with an average age of their oldest account being 30 years old. Okay. Now, it doesn't have to be 30 years old, guys. Again, you just need that minimum of 8 to 11 years. But again, the older, the better, because this is going to play a role in your average age of history. Next, they are all not immune to seeking and opening new credit. About 10% of people that had an 850 credit score had one or more increase in the past year, and about a fourth of them had opened one or more new accounts in the past year as well. So not only do we think that they had no debt, but people actually have debt that are in the 850 scores. Now, we're not saying that that's the end all be all, but again, just honestly living in America, if you are essentially borrowing money, which you don't have to do all the time, but if you get a house, if you have a car note, if you have credit cards, if you have even having them on auto pay, again, you are essentially just making sure that you have access to a lot and you're using less than what you actually have access to. Actually, I was surprised when I saw this too. I'm going to show you all the top 5 states with the highest credit scores. So you guys can see here now, they actually did this poll from April 2023 to April 2018 to April 2023. Okay. As you can see here, Connecticut was always at the top, as far as April 2023 goes. Okay. As you can see here in April 2013, Connecticut was at the top, where over 1.3% of their population actually had credit scores of 850 and higher. And Hawaii had the exact same percentage, followed by New Jersey, New Hampshire, and Massachusetts, ending at 1.13%. Now, in April 2018, Hawaii took over completely, ended up being at 2.41%. I'm just assuming this because it could be a lot of retirees out there, or it could just be, where it's not the common thing to keep borrowing money. Okay. But either way, Connecticut followed up in number 2, then New Jersey, New Hampshire, and surprisingly, Minnesota made the list. All right. Then you have April 2023, where Hawaii just took over completely at 2.62% of their population having an 850 score, followed by New Jersey finally moving up the list, Minnesota up the list, Massachusetts, and pushing Connecticut all the way down to 2.32%. Now, the question is, why do you all think so many people, or why has there been such a huge increase in people having higher scores? I think there's a couple different things. Number one, the information, the education that's out there. I mean, you guys are watching this video now, learning how to get there, right? But at the same time, that type of information, it was out there back then, but I think it's more common to watch a YouTube video, to research the information. People see the importance of this as well compared to 10 years ago or 11 years ago, technically, for 2013. So that's just more so people caring more about the information and actually looking the information up. Number two, A lot of people have been doing a lot of crafty things to improve their credit score. And of course, we've also had the algorithm helping us out too. The ability to report rent now is okay. Where again, 11 years ago, you couldn't do that. Okay. Credit builders, those were not out back then. So a lot of those things play a role, as well as, of course, quick ways to do it, like, trying to get getting a trade loan or being added as an authorized user to someone's credit card, whether you know them or not, okay, and getting that history added to your credit report, that plays a role as well. So I think that, again, the education, people truly honestly care about not just necessarily getting to 850 per se, but just improving their scores overall, okay? And of course, if you like this video, you're most definitely going to love the next one, and I'll see you there. It's going to take time to rebuild. For every one late payment, in order to get back to where you were, it takes 3 on-time payments to get back to where you were. So that takes time. That alone is 4 months, because you had the first missed late payment, then of course you have the on time, and now you're back in good graces again. Okay, and so now your score has rebounded since that time. So just make sure you stay on top of that, but don't be applying for a lot of stuff. 15% of what actually makes your credit score comes from. In this video, we're going to talk about the 5 mistakes to avoid when you're rebuilding your credit score. Let's get right into it. Also, if you're looking to increase your credit score, qualify for homeownership, or lower your monthly car payment, we can help you. Go ahead and scan that QR code or click the link in the description below to learn more, and so you can see how we help these people just like we can help you. Mistake number 1 is skipping credit report checks, okay? Now, don't be a stranger to actually checking the report when you're rebuilding your credit. I know you're probably thinking, well, there are some people I haven't paid, I can't afford to pay them, I'm not trying to see that information. You still need to be on top of it, because some companies may actually forgive the debt, or most companies are going to end up just moving past it. And you have a very small amount of companies that's actually going to turn it into a collection. But you want to keep an eye on these things, because you would hate for it to continuously drop your credit score, because we see that a lot of times as well, when people are essentially trying to rebuild their credit, but they're completely ignoring everything else that actually got their credit scores to the 300s, 400s, and 500s in the first place. So you got to be on top of it. You're entitled to free credit reports from each credit bureau annually. Now, that's by law. But since the pandemic, they've really been giving out free credit reports on various different websites. But obviously, you can go to annualcreditreport.com, or you just use Credit Karma, or of course, it's so many platforms that are out there. But Credit Karma is going to easily give you 2 of the 3 credit bureaus. But you can easily get this free Experian credit report just by going to freecreditscore.com. I know it sounds scammy, but it's actually owned and operated by Experian, as they bought them out years ago. Okay. Now, your credit reports hold the key to understanding exactly where you are in your credit journey and your health. Okay. You're legally entitled to the free credit report, as I just explained, from all 3 bureaus, and you can go through annualcreditreport.com. But the issue is when you go through them, and the reason why I don't really recommend it is because it doesn't come with a score. It only comes with reports, okay? But regularly checking your reports is going to allow you to identify any errors that may be dragging down your score, things you know about, things you may not know about. And the faster that you address those mistakes, the quicker you can see improvement, because you could easily handle some of these things by getting on a payment plan, or just by simply saying, hey, it may be inaccurate, so it may not be yours, okay? But you most definitely want to stay on top of it, okay? If you haven't done so already, make sure you guys go ahead and like, share, and subscribe. All right. So now, mistake number 2 is going to be missing out on payment opportunities. Okay. Now, payment history is the most significant factor which impacts your credit score 35%. Okay. So you want to make timely payments on existing debts, even if they are minimal. This is where auto pay is going to be key. And if you can't afford it to put it on auto pay, you may need to let it go, or see if they have some type of hardship program. Okay. But making timely payments on existing debts, even if it's the minimal monthly payment, is just keeping it in good standing. And then some people like to go with secured credit cards. It's a lot of options that are out there, but a secured credit card is most definitely one of them, or a credit builder loan to reestablish a positive payment track record. Okay. Real quick, if you haven't done so already, be sure to download our free ebook. You can actually scan this QR code, or you can click the link in the description below. Now back to the video. So now, how do you go about actually getting those accounts when your score is not the best? There's a lot of companies out there, and I'm going to show you guys a couple of those in a second. But either way, timely payments are going to be the golden rule of credit rebuilding. Okay, 35% of your score comes from that. So even a small manageable debt, making those payments every single month, whether it's $5 a month, $10 a month, $25 a month. And that shows positive payment history. It doesn't matter how much something is or how much you've borrowed. It's all about have you made the payments on time? Okay. Even if you have a limited credit history or no credit history at all, getting a secured credit card or a credit builder loan is going to be huge. Okay. And we just did a video on some credit builders that are available out there with no credit check. Also, we just did a video on some secured credit cards as well, too. So make sure you guys go ahead and check those out. Any one of those will most definitely work for you as well. Okay. But these products are going to require a security deposit. And all that means is you're paying monthly, into the actual account itself, and at the end of the term, you're going to get that money back. So essentially, you're building credit just by saving your own money. But it most definitely can help you establish a positive payment record if you use it responsibly and obviously making the payments on time. Most of those accounts are going to be auto pay anyway. So the only way you would mess this up is if you don't have money in your account. Okay. Mistake number three is going to be maxing out your available credit. Now, this is how you got to that point. You can't be late on stuff, and then obviously not pay certain people. Then your credit score drops. Then you get a secure credit card, for an example, and or a credit builder loan, and then you're late with them, or you get the secure credit card, you're maxing that out. So one of the biggest things that mistakes that people make with secure credit cards is that they end up paying three, four, $500 for one. You don't want to have to do that. You can easily go with Open Sky. I'll show you that in a second. And but they have different options for you, so you don't want to overpay. And then outside of overpaying, you don't want to get the secure credit card and max it out. So if your limit is 500, you don't want to spend 500. If your limit is 1,000, you don't want to spend $1,000. Okay, you still want to stay under about 7 to 10%, ideally 3 to 7%. And you can easily just put a bill on that particular credit card and then just put it on auto pay. It could be something small like Apple Music, Hulu, Spotify, Netflix, not advertising anybody, but any of those. No, we all got subscription services. So whichever one is the smallest one, that's what's going to make the most sense. But aim to keep your credit utilization low and paying down existing debts as well as you're rebuilding along the way. Okay. But the credit utilization ratio is real simple. You just take the balance divided by the limits, okay? Or you can multiply the percentage towards the actual limit itself. This is why I say 10%, because 10% is an easy number. If the limit is 500, then we want to stay $50 or less. If the limit is 1,000, then we want to stay $100 or less. That doesn't mean that you can't go over that amount, but if you do, your credit score is most definitely going to be going the other direction unless you start to increase that limit over time, which is going to be great. But again, this is for rebuilding. We got to focus on creating these great habits for right now. But during the credit rebuilding stage, focus mainly on paying down existing balances and avoid using credit cards excessively. That's where that auto pay is going to come in. Leave that card at home if you don't need to use it. Okay. This will lower your utilization and improve your credit score over time. All right. Let me know your thoughts. We're not done with the video yet, but let me know your thoughts inside the comment section below as you guys are going through the credit rebuilding stage and things of that sort. We're always looking to help out who we can, and just try to answer some questions if we can and things of that sort. So let us know your thoughts inside the comments. Okay. Mistake number 4. And this is going to be ignoring debt collectors. This kind of goes back into the credit report stage. Now, I know what you're thinking. Well, Calvin, you mentioned that, earlier. Is like, nah, the credit report is one thing because they may not be calling you. There are people that you owe, whether it's on your credit report or not, and then they're not calling you. But see, debt collectors, that's a different ball game. That's essentially when a company has now sold that debt to a collection company, but you don't want to ignore them. You most definitely want to stay on top of it. People have these various videos that are on YouTube saying, don't answer the phone, don't say it's your debt. Listen, you can do all that stuff, but the debt's not going anywhere. So, and you may be in a position. Now, don't get me wrong. You can easily build around it, but you may be in a position where you have to pay that, or you have to make some type of payment arrangement. You may be trying to go into homeownership and it's slowing you down. So again, don't ignore it. But ignoring debt collectors won't make the problem disappear. Communicate with them to understand your debt situation. Okay. Negotiate repayment plans or explore debt consolidation options or even settlement options as well. But in short, debt collectors, they may seem like it's a lot to deal with. Like they may seem like it's a hassle, but ignoring them can worsen the situation because we've seen clients ignore the debt collectors and then they end up being taken to court. Okay. So you don't want to end up doing that. And sometimes if they further do it, it can end up qualifying for wage garnishment as well. But it's crucial to communicate with them to understand the extent of your debt and your and to explore whatever solutions they have. Because you'd be surprised. We've seen some clients where they've been able to pay like 30% of the total debt amount, 70% of the total debt amount. So again, a lot of times, you always want to ask and see what you can get away with, or say, hey, I have, for example, if you have $1,000, you owe them $1,000. You don't have to give them 1,000. Just say, hey, I can, let me see, I have $800, I have $600, right? And so those things will try to help you along the way. You at least want to ask and just see if it's possible, okay? But negotiate repayment plans that fit your budget, or consider debt consolidation to simplify your debt management overall. Now, this is mistake number 5. Get ready for this one. This is taking on too much new credit too soon, okay? This is where you may see that one YouTube video and someone says, get this account, because you are feeling like, well, my score is not moving fast enough. And in reality, you're trying to spray air freshener on a garbage can that stinks. Okay. And what that garbage can is your old credit report, or essentially it could be your current credit report, but your old score in a sense. And it's going to take time. It didn't happen overnight that you went from a 700 or a 600 down to the fives, fours, or the threes. That didn't happen within a couple days, okay? In most cases. And so it's going to take time to rebuild. For every one late payment, in order to get back to where you were, it takes 3 on-time payments to get back to where you were. So that takes time. That alone is 4 months, because you had the first missed late payment. Then, of course, you have the on time, on time, on time. And now you're back in good graces again. Okay. And so now your score has rebounded since that time. So just make sure you stay on top of that. But don't be applying for a lot of stuff. 15% of what actually makes your credit score comes from mix of accounts. Okay. So 10 to 15%. So you got to make sure that you have a good mix over time, but you don't have to get everything you hear about. Just because there's 20 credit builder accounts, just because you heard something on the radio, just because you saw a YouTube video, your friend, your family member, listen, you have to make sure that you get what's needed specifically for you. This is why we offer a game plan package, because we can look at your credit report and tell you exactly what you need to do based on your credit situation. Okay. Now, if you want that, you can just rewind the video and then just go ahead and scan the QR code. But I'm just letting you know that there are people that are out here that will look at the report and tell you what you need to do, instead of you just adding everything and then just hoping it's going to magically turn your report overnight. Some stuff is not adding accounts. Some stuff is actually, believe it or not, closing accounts or using accounts differently, right? Some of you all have a great amount of credit cards, but they're all with the wrong banks. So there's a lot of things that kind of play a role in this credit journey, okay? But you want to space out your credit card applications, because as you're in the rebuilding stage, now you're building some new relationships potentially. Now you got people that may, because I know some people, we've had some clients get to the higher 600s, 700s, and they're getting offers that they've never seen before. They've never got anything from Chase Bank. They never got anything from American Express. And so, but you don't want to just say yes to everybody. Don't say, listen, these are like relationships. Well, you know what? Some of y'all say yes to everybody anyway. But anyway, but prioritize rebuilding your credit with existing credit lines before seeking new ones. Okay. While applying for new credit cards alone, it may seem helpful, but applying for too much too soon can easily backfire for multiple reasons. And I just mentioned the first one, which obviously you don't want to have your average age of accounts that's going to be affected because you have too many accounts all at once. But or worse, where financially you're not able to make those payment obligations that you're supposed to make as well. Okay, but each application is going to trigger a hard inquiry as well too. That's another reason why you should slow down on certain things. Even with credit builders, even though most credit builders don't run your credit, you don't have to have a tremendous amount of them. I've seen someone with like 10 credit builders. Like, don't do that, guys. That's doing too much. Okay, but be strategic with these applications as you're doing it. Don't just be guessing. Don't just throw Jello on the wall to see if something's going to stick. Okay, but focus mainly on rebuilding the score with existing lines of credit before seeking additional ones. Create the good habits. See if what you can afford to pay on time. You don't need, I repeat, you don't need 10, 20, 30 accounts to get above 680, 650, 700s and beyond. Even to get to 850, you only need 5 to 7 accounts, 5 to 8 accounts preferably, okay? But they need to have an average age of 8 to 11 years. Credit is how many accounts do you have, but how great have you done with them over time, okay? So about 5, 7, 8 accounts, that's normal, that's natural. You're going to get cars along the way. You're going to get mortgages along the way, personal loans or thing, whatever that is. You're going to get a natural mix over time. Okay. But you don't have to force this to work. Okay. But let me know your thoughts inside the comments below, about this as you guys are going through your credit rebuilding journey. And of course, if you haven't done so already, make sure you guys be sure to like, share, and subscribe. And we'll see you all on the next video. Have a good one.
Man, how do I get into Amex?
Yeah.
Right. So what I did was Amex has a business checking account. They'll send you this card. If you have a business and you go straight for the Amex business Amex, that is going to pull an inquiry. And then when you want to go for the personal Amex Platinum, that is going to pull another inquiry. How do you avoid that?
What banks that are premium that I could try to build a relationship with, but my credit is bad? And you mentioned the other day that people are essentially able to build a relationship or essentially able to get with American Express with having bad credit. Can you talk about that?
Yes. So I like to show receipts. So Calvin,
right.
I don't want to just say it. Okay.
Yeah.
Check this out, guys. So check.
There you go.
American Express.
Yep.
Right. Debit card.
Yep.
Business debit card. So
Okay.
I'll tell you a quick story. So everyone looks at American Express like the big dog of all big dogs. If you got American Express, you either established or you got good credit or you're a little wealthy. If some people attach American Express to wealth. Well, back then I had bad credit. I had no idea about American Express, how to get in. I just thought it was something for affluent Caucasian people. That's really what I thought. I didn't think my whole get an Amex. And what I did was I did my research is like, man, how do I get into Amex?
Yeah.
Right. So what I did was Amex has a business checking account. All you have to do is put your EIN number.
Yeah.
Right. To apply, you open up that business checking account. They'll send you this card. Right. And they'll send you this card. And then also while you build that, also do a savings account, a high yield savings account. It gives you about 4.5% per year. But now, right, you have bad credit, let's say, but you're adding this to your profile.
That's right. These
Now, when
accounts.
it's time to apply, right, it's easier to get the big boy cards. And I want to add one more thing is if you have a business and you go straight for the Amex business Amex, that is going to pull an inquiry. And then when you want to go for the personal Amex Platinum, that is going to pull another inquiry. How do you avoid that? You go personal first, get that inquiry, and then go business. No more inquiry.
You know what? Can you say that one more time? I think it went out just a little bit. Say that one more time about the inquiry piece.
About the inquiry. So when you get into Amex, once you get your first Amex card, right, they're not supposed to give you inquiries no more.
Gotcha.
They're not supposed to give you inquiries. However, most people, good credit, they want, hey, I want the Amex business card because I want it. They'll go straight for the Amex business card, which will pull an inquiry. And then when they want the personal, that'll pull an inquiry. Okay, so how do you avoid that? Go personal first, and then no more inquiries. Don't go business and then back to personal because that's going to cause you two inquiries.
Hope you guys caught that. Hope you guys, man, listen. See, what I love about Econ Bulldog is that he's not just giving you guys tips. These are things that he's literally he's done himself. You guys saw the debit card, okay? And so now, of course, he's giving you guys that same information. This shortens your learning curve if you all take advantage of the information. Okay. So
one of the reasons why I got this card because I wanted to go out to dinner with my wife, and I just wanted to show American Express. I mean,
it's the flex.
I'm gonna be real with that.
That's what's up, man. That is what's up, man. All right, and then let's go into the next piece here. There was, there was one thing that you had mentioned about a credit. That's what it was, a credit union. All right, so guys, this is one of the top three credit unions. Okay. And now, well, listen, you're about to hear something that Ecom has said that no one else is talking about. What credit union is it, and what major change are they making?
All right, guys. So, Penn Fed, all right, it's one of those banks that I put up there with Navy Fed. You can get in there without being in the military.
That's right.
In the beginning, when it started, it was only military based, and family, just like Navy Fed, but they opened it more nationwide, so you don't have to be military. But PenFed is cracking down, where if you have a high limit credit card and you're not using it, but you're using other cards, and they can see your spending, right? Because they pull your report. You
Yeah.
guys notice that? Like they'll pull your
Mhm.
report and they'll say, "Hey, inquiry was assessed or something because someone pulled your report."
Yeah.
That's the other companies pulling it to see if they're going to give you a credit limit increase, lower your
Mm.
credit. So that's what PenFed's doing. All
Okay.
right, PenFed's lowering it from, like, let's say you have a $15,000 card, they'll lower it down to 9.
Mm.
Okay, if you're not using that card, and they
Right.
can see that pattern. They can see that
Mm.
pattern, guys. So
Wow.
how you avoid it is use it and then pay
Yeah.
it off. All right, use it and pay it off. Remember, we're in this credit game not to use it to make us look like we have money.
Yeah.
We want to use it to make us more money. Okay, guys. So please
Yeah.
keep that in mind. Another thing I wanted to add with PenFed, they do a pre-qualify. So you
Mm.
can go on there and pre-qualify and see what you qualify for if you're approved.
Yeah.
Okay. That way
Yeah.
there's no hard inquiry. You go in there, you put household income, like I mentioned you guys before, household
Mhm.
income, rent. I like to keep it under 500 because you don't want to show that you pay a lot, because it's going to make you more risky, right?
Yeah.
So less than 500, and then household income, it could be 150, 170, 180, and then you'll see your approval odds go higher. I did want to add one more gem real quick,
Yeah.
guys. When
Mm.
someone has a credit card, okay, let's say you have the cash rewards card, right? Back to
Yeah.
Navy Fed. All right, let's say you have this card, right? You have
Yep.
this card, and let's say you have a $5,000 limit. Okay, $5,000 limit, but it's always maxed out. Okay, but let's say one
Mm.
month you get some money and you're like, hey, I'm gonna pay this card off. So then you pay it off, okay, and then that next week you ask for a credit limit increase. They're gonna
Mm.
deny you. Why?
Mm.
Because you didn't keep that low balance for 3 months. Remember how
Wow.
the bank
Mm.
every three
Yeah. Yeah.
months they
Yeah.
pull. So for you to get from 5,000 to, let's say, because Navy Fed, they'll do increments of 8,000
Mm.
on the high end, and
Yeah.
then 3 or 4 on the low end. So if you want to go from 5,000 to, let's say, 12,000, okay, you have to keep this card low
Mm.
balance for 3 months before you ask for an increase.
Mm. Now, when you say
Okay.
low balance, we're talking like what percentage? Like 10% or less?
Oh yeah, less than 10%. So I did
Okay.
my research, and FICO, the sweet spot, because I know everyone talks about sweet spot,
Yeah.
it's
That's
actually
right.
1 to 6%.
Yeah. Mm.
1 to 6%. Do not keep it at zero. Your score is not going to get the full potential at zero. There's
Yeah.
this method. I'm sure you heard it already, Calvin.
Yeah.
It's called the 81,
Yeah.
right? All
Yeah.
all credit cards except one.
That's right.
So all
Yeah.
credit cards zero except one. Keep a balance. That way you have that 1 to 6%, and then you'll see your score getting maximized.
Yep. And what I always tell people too is that, like, if they don't want to, if you guys don't want to do the math on a percentage, just find a bill that you guys have at home, put it on that credit card, put it on auto pay, something that's obviously less than $50, $100, something like that. Instead of, because we're not telling you all to find things to buy, find things you're already spending money on a monthly basis. Okay. So especially you get those points as well too. You're going to buy groceries, at least 3-4 times a month anyway, so stuff like that you guys are already kind of doing that, you have the money for. So yeah,
Perfect,
absolutely.
perfect. Yeah. I
Okay.
just got back from Vegas. We went to Hell's Kitchen, and
Oh,
the
nice.
bill was a little hefty, but I tell people I did a video on it. My meal was
Yeah.
free because I used
Oh,
my
yeah.
cash reward
Points.
points. Right,
Nice,
point.
nice.
Yeah.
What else
So
have you used points on recently, man? Not I won't say like in the last like 6 months to a year. What have you used points on recently?
okay, I'll share this. I reached 1 million points on Amex.
Wow.
Okay, and
Nice.
I'll share with you guys how I
Yeah.
did it. But
Okay.
I gave my mom as authorized user on one of the cards, and she's a travel agent.
Oh, nice.
So every time someone bought a ticket, I told her use a credit card. We racked it up to 1 million, and then when I had a buddy, he wanted to buy 700,000 points from me, and he
Mm,
paid me, I paid like $9,000, and he zelled me nine
yeah.
thousand. So
Yeah.
how I gave him the points was I liquidated for
Yeah.
Neiman's Market gift cards.
That's
And I
right.
gave him all those Neiman's Market gift cards. He was happy. He was able to get his wife a $12,000 purse. He saved like about 3 or 4,000. He already had like 400,000 points, and he
Yeah.
was like, "Hey man, I'll buy those points from you." And
Wow.
had I known about the travel hacks, because
Yeah.
that's where I'm going to now,
Yeah.
I would have not sold the points, because
Right.
500,000 points, guys, is 2 Dubai tickets first class.
Right.
You know what I mean?
Right.
That's like 20
Yeah.
grand.
Yeah, that's right.
You know what
Them
I mean?
travel
So I
hacks,
would have,
man, those are huge, man. Because you know what? But you know what? What I like about you, Ecom, is that you always think about different ways to do certain things. And because a lot of times we're like, oh, I have a bill, let me swipe this, or I'm gonna buy these concert tickets, let me go and swipe this. But it's like, look, guys, there's a lot of ways you can use these points. And listen, the travel hacking is huge because I mean, who don't want to go to certain places and do certain things and fly a certain way? Because these tickets are, I won't say expensive, but these ticket prices are crazy for sure. So
I'll share one travel hack, because, like I said, Calvin, you
yeah,
definitely gave me an opportunity on my first real interview on YouTube. So
that's right, man.
definitely kudos to you, man, and help my
Yeah,
channel grow. We're at
that's right.
90K, almost trying to be where Calvin's at with the plaque coming soon. Congrats on that.
Thanks, man. I
But
appreciate it.
I do want to share something that I learned at a mastermind. And if you guys fly Southwest a lot, because Southwest got the deals, if
They do.
you get
Yeah.
the personal card and you get the business credit card, okay, right? They'll give you a way so you can spend, let's say, 5,000 on one, and then the other one, let's say 4,000, because you have to accumulate 140,000 points
Yeah.
for you to get the Southwest and companion pass free.
Mm.
That means is every time you buy a Southwest ticket, you'll have a companion pass for free. Now you guys are
Yeah.
like, well, you have to spend 5,000 on one card and 4,000 on the other. Well, that's where you do MS proper
Right.
way.
That's
You know
right.
what I mean? That's how
Yeah.
you met. Hey, Calvin, can you send me a receipt for 5? I need to swipe to get these points. Right?
Yeah.
That's how you do it. And then now you travel for free for someone. You know what I mean? Either,
Yeah.
hey, go half on this ticket, or I could bring my daughter with me. I could bring my son with me, and they never have to pay. And that's for 1 year. So look into that, guys. It's called the
Yeah.
Southwest Companion Pass, and you have to accumulate 140,000 points.
Wow. Southwest Companion Pass. Make sure you guys look into that. Listen, he gave some extra gems today, guys. We just got on another topic. But listen, let me know in the comment section. Did you guys learn something today? And if you guys want me to bring Ecom Bulldog back, y'all told me to do it last time. He's back today. But listen, if you want me to bring him back again in the future, because listen, this is just the tip of the iceberg. Okay. So my schedule, both of our schedules are a little tight today, but listen, next time we most definitely give you guys. But thanks again, Ecom. We greatly appreciate you as well. And also, too, guys, make sure you guys go ahead, stop what you're doing now, check out his YouTube channel, subscribe today. This is just the beginning. He has a lot of gems, and he's always make sure you check out his shorts as well, too. A lot of information over there as well. So, anything else you want to leave with the audience, Ecom, before we get out of here?
No, Calvin, thank you always for supporting me. Like I said, support you, brother. Appreciate it. And like I said, guys, we share these gems to you guys and for you guys to execute.
That's
right? If you guys watch Calvin stuff, execute on the information.
Yeah.
All about you guys. Take action.
Right.
All right, guys?
That's right. Now, this actually low key happens every single month. So if you or anyone you know has a student loan and is not paid, okay, this is going to be treated like any other installment loan through the algorithm. Okay, now an installment loan is anything that ends in the word loan: personal loan, mortgage loan, auto loan, and of course student loan. Okay, now why does that matter? Because loans are the only ones that have. In today's video, we're going to talk about 4 things that will easily drop your credit score that happen randomly. A lot of times people think that their credit score drops for no reason, but it's usually one of these 4 things that most people don't talk about. Let's get right into it. By the way, if you're looking for some help to increase your credit score, qualify for homeownership, or even lower your monthly car payment, all you have to do is scan the QR code and we'll create you a custom game plan and help you like we did these people. Now let's get back to the video. All right, so let's get into the myth. Now, some people feel like, oh, well, you know what? My credit score just dropped for no reason. There's always a reason, but it's usually reasons that most people don't talk about, okay? And that's a common misconception, is that they can drop for no reason. Now, credit scoring models also consider various factors with some delayed impact. This means that you may do something and it may not update at the typical time that it normally would, but for the most part, typically things are going to be updating within about a 30 to 45-day window. Okay. Now, it may feel like your score dropped out of nowhere, but there's always an explanation. Okay. And most of the time, credit scores, can have an update, and that may be behind based on an event or something that that's recently changed or recent action that may now be reflecting as well. Okay. So number one potential culprit is going to be payment mishaps. This is kind of common, but what people don't understand is that sometimes is that if you're almost late, sometimes those companies will report that to the credit bureau. So let's say, for example, you are past due on something. Okay. Now, past due does not necessarily mean 30 days late. Credit reports and credit bureaus only care about 30-day late payments. So let's say, for example, your payment is due on the 15th for whatever it is. Okay. And now the 15th has now passed. So now you are technically late. You're not 30 days late, but you're technically late. Okay. Now, let's say, for example, you're about 25 days late. Okay. That more than likely is going to come up with an update on your credit report, or is going to have some type of, mark on it that says, past due. Once they add that past due mark, that is what's going to trigger a credit score drop easily. Okay. Now I know what you're thinking. Well, Calvin, I am late, but I'm not 30 days late. Exactly. That's just a status update. So this is very common when people are late on something, but they're not 30 days late. And so the status changes as past due or late or something like that, because technically you are late, but you're not 30 days late. Either way, when they change that status on that particular item on your credit report, that's what's going to affect your credit score. Okay. And obviously, late payments or missed payments can significantly impact your credit score as well. Now, what you want to do is just simply review your recent payment history and look for any missed deadlines. See if you can put something on auto pay, or see if it's something that you can actually afford, every single month. Maybe something needs to be consolidated. But in short, late payments are a major credit score villain, as we know. Double check your payment records to ensure that no missed deadlines are dragging your credit score down. All right. If you guys haven't done so, make sure you guys go ahead and like, share, and subscribe as well. Okay. Number two is going to be credit inquiries, the short-term dip. Okay. Now, we call this the short-term dip because credit inquiries only last on your credit report for at least about 2 years. Okay. Now, obviously, there are some things you guys can do to try to get them removed and things of that. So we actually have a product as well, too, that works 80% of the time to try to help you remove some of these inquiries. But guys, it's not the end of the world. Okay. I would say inquiries that show up on your credit report, they're only going to be on there for 2 years. And the closer that it gets to 2 years, then it's going to have a lower value. Okay. And so you guys got to think about it like this. Inquiries are part of the game. In order for you to the whole point of having credit, someone has to take a look at it, right? Real quick, if you haven't done so already, be sure to download our free ebook. You can actually scan this QR code, or you can click the link in the description below. Now back to the video. So that's the whole point. But anyway, anytime you apply for obviously anything that's new credit, loans, credit cards, an apartment, that's going to trigger an inquiry. Okay. Increase can cause a temporary score decrease. This usually lasts about a month or so. It's not that big of a deal. But you can also apply for new lines of credit, which leads to increase on your credit report, as I just mentioned, which can cause a slight temporary score dip. This impact is usually short-lived. When we say short-lived, no more than about 2 to 3 months, as long as you have other things that are on your credit. Now, if you're applying for things you got denied and you already don't have any open accounts, then you're not going to see your credit score move as much because there's nothing positive happening every single month. Okay. Now, this is number 3. This is the biggest thing right here. Okay. And this is going to be student loan balance increases due to student loan deferment. Okay. Now, this actually low key happens every single month. So if you or anyone has a student loan and is not paid, okay, this is going to be treated like any other installment loan through the algorithm. Okay. Now, an installment loan is anything that ends in the word loan: personal loan, mortgage loan, auto loan, and of course, student loan. Okay. Now, why does that matter? Because loans are the only ones that have an expiration date. Revolving accounts are the second type of accounts that's on your credit report. Revolving accounts don't have an expiration date because the amount that you owe revolves. It changes. You borrow money, you pay it back, and that's simply how you do it. But with a loan, it's simply like, hey, we give you a lump sum and then we are going to charge you based on monthly payments. So the algorithm is looking for that structure. It's looking for that student loan to be to essentially be on your credit report like an auto loan or like a mortgage loan, where there's a set time, there's a set payment, and there's an expiration date. But here's the issue with student loans: there is no expiration date because essentially it's optional to pay, right? It's not optional to pay altogether, but it's most definitely optional to defer it. But you can't defer your mortgage without having some type of impact. You can't defer your auto loan without having some type of impact. You can only do this with student loans. And because of that, the interest is still there. You still have a per diem, which is a daily interest like any other loan. And that daily interest is going to be added to the loan because you're not paying on it. Now, you've been had daily interest on your other loans, but again, since you're making monthly payments, you're not seeing the loan increase because that daily interest is already inside the monthly payment. So if your student loans are in deferment, unfortunately, you're going to see that per diem, that daily interest, and that's going to affect your credit score every single month. Okay. And so installment loans are set for an expiration, but with student loans, they grow over time, especially if you don't pay them. Okay. Now you can make payments while it's in deferment. Deferment means we're not expecting payment, but you still can make payment. But 98% of student loans that are in deferment don't see any payments anyway. Okay. But student loans in deferment will slowly drop your credit score. Okay. Each month as the loan balance is growing, loan balances only grow if payments aren't made. The algorithm hasn't really adjusted to the deferred student loans, as most loans have an expiration date. And as I mentioned, they are optional to pay. Okay. Let me know your thoughts about this as well. If you guys have dealt with any student loans or anything like that. We're not done with the video, but we always like to get an idea of what people are going through, what questions they have, things of that sort, as you guys are dealing with random credit score drops. Okay. Identity theft. Now, this is an unseen threat. A lot of people, I think, don't keep up with stuff like this because it most definitely can happen, especially if you have common names. If you're a junior or you were named after, someone in the family, there can be a lot of mix-ups as well, too, that may happen on mistake or that may happen, unfortunately, purposely. Okay. Now, identity theft can involve fraudulently open accounts in your name. Now, people joke about utility bills being opened up in their kids' names back in the day, but this is some true stuff. I've seen it myself. Okay. And sometimes, or someone has used your name for something and you didn't know it, or you may have co-signed for something. They normally make payments on time, but then they close that account. So, the auto pay didn't catch the monthly payment, and you may just be on the side of that. You may be an authorized user on a credit card, and they may be late or about to be late. So a lot of these things that your name can crisscross in, even outside of identity theft, is going to play a role as well. Okay. So over time, be sure to check for unfamiliar accounts or increase on your report. Now, identity theft is a serious issue. It doesn't happen as much in today's world. Right now, they go straight to the money and they just take the money or whatever they're trying to get, because it's a lot more work to try to take someone's identity, right? But it's most definitely a serious issue that can most definitely wreak havoc on your credit. Okay. Be on the lookout for unfamiliar accounts or inquiries on your report, which could be signs of fraudulent activity. Okay. And then also you need to take action. Okay. And this is where, if you do see something that should not be there, you can always dispute something on your credit report and try to get that removed. And of course, that's going to end up repairing it and putting you back to where you used to be. So in short, if you find errors, be sure to dispute them with the credit reporting bureaus. Provide documentation to support your claim. Documentation is going to help you every single time. So you may have to show proof that you are you. You may have to show proof that that's not your account. Okay. So make sure you send as much documentation as you possibly can, whether you're disputing online or whether you are doing it where you're sending in letters. It's really just up to you on how you want to do it. But if you discover that there are errors on your reports, don't hesitate to dispute them with the credit bureaus. Okay. Disputing with one bureau is only going to go to that bureau. They have nothing to do with other bureaus. So you have to make sure that you're on top of it for sure. Gather your documentation to strengthen your case for correction as well. And here's another thing too, guys. Sometimes you have everything in place. We had a client where a lady had the same name as her grandmother. Her grandmother had some outstanding debts after she passed, and they tried to come for our client. And unfortunately, she was in a position where she had to take care of some stuff, and it put her in position because it was taking too long to try to get it fixed. But she eventually got the situation fixed, but it took some time for her to show that, hey, I am me. I know we've had this same address, but here's my social, here's my date of birth. I happen to have the same name as my grandmother. So those small common things end up happening for sure. Okay. Now, another way is, of course, prevention is key, and that's trying to prevent these things from happening altogether. Okay. Just staying on top of things, making sure that things actually make sense to you. So make sure you regularly monitor the reports for early error detection. We talk about this with bank accounts as well too. It's a lot of stuff that happens out here in this world, and you got to be on top of it. Otherwise, things like this can happen. Okay, but develop a responsible, habit of always checking these things, putting things on auto pay. Not overusing certain things, making sure that you're not missing dates and things of that sort. That's most definitely going to help you as well. But overall, the best defense against the credit score surprises is going to be proactive monitoring. Okay, regularly check your credit reports and maintain responsive credit habits. Putting things on auto pay that you can, not applying for everything that you don't necessarily need. Making sure that you're obviously safeguarding your personal information like your social security number and things of that sort. But you'll be surprised. These basic things that a lot of people, know, or I would say that most people may know, some people don't know. People are new to credit. Some people forget about credit. Some people had, they never really had to use their personal credit. People kind of did things for them. So a lot of those play a major role as well. But in conclusion, take control and do understand credit scores are going to fluctuate. It's a part of life. Okay. You have old things falling off, losing value, whether it's positive or negative over time. You have people looking at your reports and things of that sort, over time. So it's going to fluctuate. Okay. And that's normal. But understanding why is going to most definitely empower you for sure. But taking proactive steps, you can address the issues and build a strong score along the way. Okay. But either way, that's just making sure that you got the right habits, you got everything in place. But make sure you guys go ahead, if you haven't done so already, leave your comments inside the comment section below. Let us know if you have any questions. We try to get to as many as we can, but we want to make sure we at least hear from the audience as well. And if you haven't done so already, make sure you go ahead and like, share, and subscribe. And we'll see you guys at the next video. Have a good one. Hope everyone's doing evening. Doing evening. Hope everyone's doing great this evening. Calvin Russell here. Let's get right into it, guys. Instagram, Facebook, YouTube. Let me know if you guys got questions as I make this quick live tonight. Wanted to go ahead and give you guys some information. One of the comments I saw, and that was, which is better for you, a credit builder account or a secure credit card? Now, let's go back into this. So, in my personal opinion, oh, you know what? I'm sorry. Hold on. Instagram, I know you guys can. There we go. Sorry about that, guys. Had to do a little quick setup today. Okay, cool. All right, so let's go right into it. So now here's the thing. Secured credit cards. It's more of an old school way of building credit, right? Secured credit cards have been out for years. It's nothing wrong with using a secured credit card to build your credit. The thing is that one, you guys got to make sure you get the right secured credit card. And number two, you got to make sure that you're using it properly, okay? Basic credit card tips that you're using. This is secured or unsecured. Number one, you want to make sure that you use your credit card a very small bill. Put a very small bill on your credit card if you decide to get a secured credit card. Here, let me give you, hold on. I think I'm going too fast. First off, let me answer the raw question. Credit builder versus secured credit card. They're both about the same. I recommend a credit builder just because it's cheaper. And most credit builders are really CDs. Okay. They're certificate of deposits, which means that you're saving money in order to build credit. Okay. If you're saving money in order to build credit, then that's going to help you guys out big time. Okay. So essentially, you pay a monthly fee for 1 year, 2 years, whatever the term is. At the end of the term, you guys get the money back that you put into it. Okay. So you're building credit just by saving money. Every month that you make that monthly payment on time, they report it to the credit bureaus. Now, depending on what type of credit builder you have, some report to one bureau, some report to two, and some report to all three. Okay. Companies like Credit Strong, Self Lender, those are like the big names. There are some other ones too. Those report to all three. Now, if you go with Kovo is pretty nice. Kovo is pretty cheap. Kovo's like $10 a month, but they only report to two bureaus out of three. Okay. And then you have Kickoff. Now, Kickoff it's supposed to report to all three, but typically I'll see it on about two bureaus. Okay. And it's different too, because on different states from different clients, I've seen it where it reports to just two bureaus. Okay. But Again, I recommend a credit builder just because, again, it's low cost. You can grab 2 of them and there's no hard credit pool. Okay. Versus a secured credit card, or in this particular example, with a secured credit card, some of them do have to run your credit. If they run your credit, then you have to get approved for it. But then there's some that do not run your credit, like Open Sky. They don't run your credit. Okay. That's one of the few that don't run your credit. Now, Kickoff has a secure credit card. Self has a secure credit card. Those won't run your credit either. Okay. But if you guys do decide you want to go with a secure credit card, it's still an old school way of doing it, but it's still a good way to mix up your credit in general. So I only recommend a secure credit card if you guys are like under 520, under like 550. There's so many other platforms and options out here. But if you really want to go to secure credit card, go ahead. Just make sure you do these 3 things. Number one, get an account that you have already, like a subscription account, like Apple Music, Hulu, Spotify, a gym membership, Disney Plus, Netflix, something like that. You put that on the credit card. That's number one. Number two, you put the credit card on auto pay. Okay. So why do we want to get a small bill? We want to get a small bill. That way it doesn't throw off our utilization. Okay. So for example, if your limit's 200, 300 and you get a bill that's like $20, $30 a month, then you'll be good to go because you always got $20, $30 a month to build your credit. Okay. So that's number one. Number two, you want to make sure, well, I think I did number one. Number one, get the bill. Number two, put it on auto pay. And then number three, this is what a lot of people mess up. They keep the secured credit card too long, in my opinion. You only want to keep the secured credit card, I would say, for about, okay, because anything longer than that is not worth keeping it unless it is a secure credit card that's going to upgrade from secured to unsecured. But if you got a secured credit card from your bank or you got a secured credit card from a credit card company, call them and find out, will this upgrade to unsecured? If it will not, you need to close that account in 1 year or less. Don't forget, guys, secured credit cards have one job and one job only. What's that? To help you build your credit, to help you go from secured and unsecured, to help you qualify for different things, to help you improve the score overall. Once it's done that job, you're done with that. The reason why I say close that account, here's why. Don't forget, you paid that money. You paid $200 to get that credit card. You paid $300 to get that credit card, okay? And then if you really, really, really got to go secure, start with Capital One. Why start with Capital One? Capital One has a 3-tier program. $49 deposit for a $200 limit, $99 deposit for a $200 limit, and a $200 deposit for a $200 limit. That's all based on what your credit is at the time that you apply. Okay. So I got a lot of these links inside of if you guys are watching this on Facebook or YouTube, just to make things super easy. You can Google this stuff too, but some people say, oh, what's the link? Okay, here's the link. You guys are going to just click that and it's going to be a lot easier for you too. Okay. But those are some easy ways to build your credit. Now, if you're like, hey, Calvin, listen, I get that, but I need more of a structure. Okay. Then here, it's not too late to join our 90-day credit challenge. Okay. And with our 90-day credit challenge, I take a look at your credit report. Okay. And I'll tell you exactly what you need to do based on what your goals are. So just keep that in mind. We can look at your credit report and tell you exactly what you need to do to not only improve your credit score, but to help you guys accomplish whatever goal that you're looking to accomplish this year. Okay. Even if you're not looking to go right into even if you're not looking to like go right into home ownership this year or whatever the case may be, again, you most definitely have time. Okay. We can most definitely do this and you most definitely have time to do so. I've helped hundreds of people. I've helped thousands of people nationwide with our process. Okay. And we're here to help you get to where you want to be as well too. Okay, guys. So she said, I thought it was not good to close out an account. No, you're perfectly fine. It's not good to close out an account that's got years of age on it. But if you close out the account in a certain period of time, you will be just fine. Okay. I'm telling you, that's the whole point. 1 year is not going to hurt you because you got 12 months of on-time payments. It's not like it's going to fall off. The payments don't fall off until 1 year later. I'm sorry, until 7 years that is after it's been closed, but all of those monthly payments will still be on your credit report. All right. So hopefully that was helpful, guys. Don't forget, tomorrow is the last day to join the 90-day challenge. So we most definitely put you guys in position this year. Okay. If you guys got any questions, comments, or concerns, put them in the comments. If I don't get to them tonight, we'll get to them tomorrow. Just want to give you guys some quick insight and help you get to where personal loans can also help improve your credit mix because, of course, as we know, with your credit mix, you have revolving accounts and you have installment accounts. Installment accounts usually end in the word loan. So personal loan, auto loan, mortgage loan, those types of things. Okay. Which is another factor that affects your credit score overall. One of the best ways to build your credit is to simply In this video, we're going to talk about the impact of personal loans on your credit score. Let's get right into it. By the way, if you're looking to increase your credit score, qualify for homeownership, we can help you just like we help these other people as well. To learn more, click in the description below or scan this QR code. So how does applying for a personal loan affect your credit score? Okay, so number one, when you apply for a personal loan, the lender will conduct a hard inquiry on your credit report. Some of you all may know this as like a hard pull. As we know, there's a hard pull and a soft pull. A soft pull or soft inquiry is not going to affect your credit score. However, with a hard pull, it most definitely will. A hard inquiry can cause your credit score to drop by just a few points, but don't worry. Hard inquiries only stay on your credit report for about 2 years. And the closer that it gets to the 2-year expiration date, the lower the value it has on your credit score anyway. Okay. The impact is usually temporary, and your score should rebound in about a few months. Okay. Because it's only a few points. When you apply for a personal loan, the lender will need to check your credit history to see if you are a good risk. They also want to get more information like your income, how long you've been in your job, and a few more things as well. This will involve a hard inquiry, as we just mentioned, on your credit report. And as we just talked about, a hard inquiry can cause your score to drop just by a few points. But again, the impact is temporary. Most scoring models only consider hard inquiries from the past 12 months when calculating your credit score anyway. Okay. Also, if you haven't done so already, be sure to like, share, and subscribe. Now, how can personal loans help you build your credit? Okay. Making on-time payments on your personal loan is one of the best ways to build your credit. Okay. On-time payments account for 35% of your credit score. Personal loans can also help improve your credit mix because, of course, as we know, with your credit mix, you have revolving accounts and you have installment accounts. Installment accounts usually end in the word loan. So personal loan, auto loan, mortgage loan, those types of things. Okay. Which is another factor that affects your credit score overall. One of the best ways to build your credit is to simply make on-time payments. Now, it doesn't have to be a personal loan. This is just the positive side of what a personal loan can do outside of obviously debt consolidation and things like that. Now, this includes your personal loan payments as well as your credit card payments and other loan payments. Okay. Making on-time payments shows lenders that you're a responsible borrower, and it can help you improve your credit score over time. Personal loans can also help you improve your credit mix, as we just talked about, okay? Such as revolving accounts like credit cards, like I just mentioned, and of course, installment credit, which is anything that ends in the word loan. Having a mix of credit can help you improve your credit score overall. Let us know your thoughts inside the comment section below about what you think about personal loans as well. Now, how can personal loans hurt your credit score? Okay. Now, this is very important information that a lot of people don't know of. And that's obviously is going to start off with missing payments on your personal loan can severely damage your credit score. Okay. Late payments can cause your score to drop by as much as about 100 points or more. Okay. Defaulting on your loan can also have a negative impact on your credit score overall. Now, while personal loans can help you build your credit, obviously, if you're making your payments on time and you're using it not to make new debts, but preferably if you're taking that money and then paying off some debts or consolidating some debts, they can also hurt your credit score as well if you're not careful. Okay. Missing payments on your personal loan can severely damage your credit score. Late payments can cause your credit score to drop by as much as 100 points or more. Okay. Defaulting on your loan, which means failing to make payments altogether, can also have a negative impact on your credit score and can stay on your credit report for up to 7 years. But like I mentioned, just with the inquiries as well, with personal loans or any account, as it gets closer to the expiration, okay, so inquiries expire in 2 years. Bankruptcies are going to expire in 7 years, and a chapter 7 is the only one that's going to stay on your credit report for 10 years. Outside of that, everything's going to stay on your credit for about 7 years if you're not trying to get it removed by disputing or something like that. But as it gets closer to that expiration period, it's going to have a lower value as well. OK, so it's something to keep in mind. I know for a lot of people that's credit conscious about their scores, what they can and what they cannot do. But this is how it's going to impact you the most. By the way, if you're looking for a personal loan recommendation, this will be my first one. And this is going to be upstart.com. Now, Upstart, to learn more about them, you can scan this QR code right here in front of you. Now, their credit scores that they take is about 580 or higher. Upstart typically looks at things outside of your credit score, okay? That doesn't necessarily mean that you're going to be declined or approved automatically. They're still going to look at things, but most personal loan companies are going to look at the basics like your income, how long you've been on your job, things of that sort. Upstart's going to look at some things outside of what's on your credit score. So I would say start off with them first, okay? The next option is going to be with a company called upgrade.com. Now with Upgrade, they're going to take a little a credit score that's a little bit higher, about 620 or higher, okay? To learn more about them, you can scan this QR code as well. But those are the first ones I would say start off with. And then here are some additional personal loan options as well. Now, if you guys have been watching me for quite some time, this list kind of changes because some companies change. Some companies go out of business. So some companies buy out other companies. Some companies change names. Avant.com, they've been around for years. HappyMoney.com sounds crazy, but they used to be Payoff.com. I don't know why they changed their name to Happy Money. Sounds kind of sketchy to me, but it's still a legitimate company. LendingClub.com, American Express Personal Loans, Discover Personal Loans, and SoFi.com. So those are going to be great ones to start with. And these are all soft pools, okay? So that means that you can see what your terms are, see if you can get approved with no impact to your credit score. If you do get approved and you decide to move forward by choosing a loan option in the terms, then they will do the hard pull because by that time you decided that you want to move forward. But if you just want to see what you can get pre-approved for, or if you're going to get approved in general, you can try any of these options, but start with the first two to start off with, because those are a little bit, I won't say easier to get. Those are going to be ones that I've seen people get approved for as well, but you have plenty of options to go by. Thanks again for watching, and be sure to go ahead and like, share, subscribe. We'll see you at the next video.